that was a factor that I wonder whether will roll out of the market today, whether we see tech bouncing back. ASML did deliver some significant weakness into the market yesterday. That was really my only takeaway from yesterday's session. So I wonder whether that reverses a little bit today. It'll be interesting to see whether that comes through as we continue to see NVIDIA marching ever higher.
Nasdaq futures pointing higher by 0.6%. The open is 2 seconds away. Futures pointing higher by 0.2%. Let's see how it reflects in early pricing then. As we get the first print coming through, the UK, the FTSE 100, just adding 2 points so far in the opening seconds, 8,206. Not a lot going on in the commodities space around basic resources that may play into the UK space. Brent up 0.2%. Gold's interesting, up 0.6. Back to the equity markets, though. You're getting an opening print up 0.1% for the FTSE 100. The DAX over in Germany up 45 points so far.
But tech leading. I mean, to your point about some of the big moves. Yeah. I mean, ASML at the top of the bucket here, SAP as well in terms of index contribution. We should mention, though, that the U.S. was closed yesterday as well. So there is a little bit of a catch-up trade from even two days ago. There isn't a precedent really being set here in terms of what's leading. To me, it looks defensive right off the bat.
To a certain extent, it depends how you define tech, isn't it? So this is the kind of the big question that I'm wrestling with at the moment is, what is tech? What is NVIDIA? Why are you buying tech? Why are you buying NVIDIA? Well, no, because are you buying it because you're hiding from the coming storm? Are you buying it because you believe in AI? Are you buying it because you don't want to buy anything else globally, and therefore you buy NVIDIA? The NVIDIA chart is just eye-watering. But ASML continues to move higher, as you say, so tech is having a better day today. Defensive, maybe. Danone is a little softer today. I need to check. I don't think I didn't see Danone on my list of stocks when it came to dividends. So that seems to be.
There's an interesting UK story as well around NatWest and Sainsbury's. So Sainsbury's banking operations being sold to NatWest. NatWest not really moving on the back of that, but Sainsbury's is one of the top gainers, up 2.2%, the grocer there, as it unwinds that part of the business. So we continue to keep across that. ASM International is one of the top gainers, also based in the Netherlands, of course, also within the semiconductor space, up 3%. And then on downside, some of the travel and leisure, like EasyJet and Ryanair, down between 1 to 2%.
Can I come back to Danone? Because yogurt is important, and if we're talking about France, it is a strategic asset, as we've learnt in the past. So Danone is a little softer this morning, but also some of the rest of the sector is as well. Nestle is down. So Danone, there's been a 2025 to 2028 strategy update this morning, and the market may be a little bit more cautious after we've seen that update, which is why maybe we're seeing yogurt underperforming today, which is an important thing to note.
I'm still wrapping my head around you calling it Danone. In the States, that we call it Danone.
Danone?
Danone.
Not Danone?
No. It's also branded, spelled differently. Anyways, this is a longer story. I should mention, though, that you have some of the other French stocks underperforming as well. So I'm curious how much of that is going to show up. I also want to point out that UBS is one of your biggest index weights on the stock 600. How much of that changes as well? Despite that it's a very global bank as well, how much of that is going to have some sort of reaction off of the S&P decision as well?
We're waiting for the next catalyst, which either could be the S&P, so we'll see what that looks like, or it's just the reopening of US trading a little bit later on to see whether or not NVIDIA keeps climbing higher, whether the sort of equity market glass half full approach is the right way to go. Talking of that kind of glass half full optimism that equity investors instinctively seem to have. We spoke to Stephen Orth, the CIO of Federated Hermes, on what is happening in Europe and the optimism he has broadly about the equity markets.
Can't help myself but be optimistic, because against all that, you got a valuation 10 points below the S&P, you know, in a way. So, yeah, I have to be optimistic. And, yeah, I would say the banks here look interesting to us. A lot of the commodities type companies I mentioned earlier. And there's some great little growth stocks in Europe, too.
Great little growth stocks. Not quite as great as the ones we're seeing over in the United States, but great little growth stocks over here too. It's interesting that he picks out the banks, given the turbulence we've seen surrounding what has been going on in France and the impact on the banking sector that we've seen there. Is everybody as optimistic on Europe? Let's find out. Yogi Diwan, Hassiem Asset Management CEO and founding partner, sitting opposite us now to discuss. You're still overweight Europe, but I read your notes this morning, you're becoming a little bit more constructive when it comes to Europe.
Yeah, no, absolutely. Europe is doing reasonably well. The snap elections were not great news. I don't think it's good news for France. If you look at European equity markets, they're up, 12% year to date. I know that the US is doing better, but once you strip out NVIDIA, looking at the US up 15%, NVIDIA's 5% of that. If you strip out all of the tech names, Europe's actually doing better than the US. Europe has obviously got some problems. Snap elections are likely to lead to a hung parliament. If you get a hung parliament, fiscal spending now becomes a problem. You can't pass the fiscal spending and so on and so on. So as a result, that will impact on earnings. It's earnings that drive share price appreciation.
If I'm a US investor, I'm looking at Europe and going, yeah, you told me it was going to get better. You told me that this was the diversification trade. Now look at what's happening. Why are US investors going to be interested in putting their money to work in Europe? And if they don't, are we going to see this rally really peter out?
Look, the rally in the US is being driven by AI. It's tech heavy.
Sure.
And the tech heavy element is now a crowded trade. So what you're starting to see is some diversification, a move out of the US into Europe. Valuations are a lot more reasonable. Forward PEs at 14, not 22. And with NASDAQ, we've got forward PEs at 33. You've got a weaker euro. It's 29% undervalued versus the dollar. That will help exports.
The problem with, every time I hear the word diversification, I hear underperformance. And that's the problem.
I think you go right back to basics, Guy, and you just...
If you have a diversified portfolio, you are going to underperform. That's been the lesson of the last few years, isn't it?
If you're a long-term investor, you should have everything in global equities, not in bonds, and you should be riding it over a 10-year period. The S&P 500's done 10 to 15% if you go back over the last 20 years. But that is unusual. That does not mean that's going to continue going forward. And when valuations get very stretched, NASDAQ at 33, the S&P 500 at 23, 24, that's when investors get a bit nervous, and then they look to reallocate to value, putting geopolitical risk aside, putting election risk aside. And the other thing to bear in mind is you've got bond yields up at 5%. This is a good environment over the longer term. This is a carryover cash trade ready for when you can allocate capital to equities with a long-term mindset.
I think what Guy is reminding us of is that his pure play investment of his pension into NVIDIA back in 1999 and how he's sitting pretty as a result of that, Yogi. Look, on the political elements around France, you said France is looking a little ugly and a little challenged right now on the politics. Do you buy France at this point? Is it looking like is there a gap here to add? If you're a long-term investor, valuations have dropped, get exposure to France.
No, we wouldn't. Look, France is up 4% year to date. It's lost 4% in the last month because of what's actually going on. And if you do get a hung parliament, if you do get these issues, it will impact on fiscal spending, as I've said. This will impact on earnings, and it's earnings that drive share price appreciation. You can't rely just on valuation in France. You can't rely on a weaker euro in France. That's all old news. The fundamental picture does not look good in France.
The UK. Politics are here, July the 4th. How are we thinking about the UK? We have the BOE today. Expenditures, of course, to stand pat on rates. Is the UK, the FTSE 100, with that international exposure, what do you do with UK assets at this point?
So the UK is up 8% year to date. Okay, that's the FTSE 100. Look at the FTSE 250, which is a more realistic picture of what's going on domestically. That's only up 5% year to date. The big issue in the UK, and it's different to France, and it's a subtle difference, is that if Labour win in the way that the polls are suggesting, then you're going to see a massive increase in corporate tax rates. Corporate tax rates impact on earnings, and it's earnings that drive share price appreciation. Again, the only saving grace in the UK is valuations. PEs are around 12. Also, if you take the FTSE 100, 60 to 70% of its revenue stream is US related. So there's a massive leverage to the US market, and the US is
Labour have said they wouldn't raise corporate tax rates.
There's a real good sense from a market perspective that corporate tax rates will go up if Labour actually win, despite what's being said and discussed.
You say that there's nervousness on perhaps both sides of the Atlantic in terms of valuations in particular. Why then, if there's so much anxiety in this market, as you say, is no one hedging their bets? Why is downside protection so cheap?
I think the downside protection is cheap, but I think a lot of investors are just going into the bond market. Yields look like they're going to stay higher for longer. You've got very high rates at the moment. You've got fiscal spending plans which usually kick in with an election year, which again leads to high yields with bond issuance. We'll see that with France today. The hedge is to go out and buy fixed income. And if you can pick up fixed income at around 5%, it's a carryover cash trade. It's not a diversification trade. It's not an insurance trade. Insurance is 10 years. Diversification, duration's around 5 years. This is just carryover cash. It looks attractive.
So it might be 5%. I can understand and appreciate that in terms of history. It's very lucrative. But I'd also argue that there is a lot of, I don't want to call it greed, but desire for even more yield given the environment that we've come out from. And people aren't looking for just a single-digit gain, but even looking at double-digit gains. It's creating appetite for private capital, for more EM, for more political risk, and really clipping the yield. Why is 5% enough right now?
It's your sleep easy money. Everyone's got Nvidia in mind, and Nvidia's done, what, 200% over the last 12 months. It's insane. Will it continue? Arguably not. Valuations look very, very stretched. I think investors are very keen to just clip 5% when valuations look stretched. There's a lot of geopolitical risk in the marketplace. The geopolitics is very different to the war risk, which the markets have pretty much ignored. And at the moment, if you can clip 5, even 6% in investment grade credit, investors are happy with that, with their sleep easy money.
What, do you own Nvidia? Should you own Nvidia? If you owned Nvidia, would you sell it?
Gosh, I would be looking to sell or at least trim positions if we owned Nvidia as a direct stop. Likewise with Apple and Microsoft, I think that the AI narrative is definitely a very crowded trade and very stretched in terms of valuation, arguably in a bubble. We do own it indirectly because of the passive exposure we have to NASDAQ. And we're very happy that we've got that, but it cannot continue.
That's a brave call, selling Nvidia, selling Apple right now. But you think it's looking long in the teeth?
Definitely.
Where do you allocate that cash then?
That cash can be allocated to Europe. On the reason, based on the reasons that we've been talking about, and you've already seen that trade actually take place. Remember, if you strip out all the tech names, Europe's doing better than the US. Just
that's
on the
a big if, though. That if's still there's a lot of weight on that if.
There is a lot of weight on that if, and look, we've still got tech exposure, and we are still at market weighting on tech exposure. We would trim positions almost certainly because markets are looking very frothy in the tech space, and investors seem to agree with that at the moment from what we're seeing.
What is fair value for Nvidia then?
Oh gosh, who knows? Who knows?
But it's not right now.
Yeah, well, it's hard to say. I mean, look, as long as the earnings numbers continue to deliver, then investors will look to own it. It's whether the trade is crowded or whether it's at fair value. That's the discussion. That's the debate.
Yeah.
Joey, great to see you. Thanks for stopping by to see us. Yogi Diwan. He'd be selling Nvidia. Hassiam Asset Management, CEO and founding partner. Thank you very much indeed. Let's talk about what's happening in Europe. These are the details of the biggest stocks that we watch out for on a daily basis. Danone is down today. It's affecting Nestle, as you can see on the right-hand side of the screen. Tech is coming back a little bit, which is interesting as well, because that was the sector that was sold yesterday. But ASML bouncing back up 1% today. Novo Nordisk flat. LVMH fairly flat as well. We continue to watch what's happening with French stocks. Let's figure out what else is happening. Joe Easton, over to you.
So we're going to start with a big dropper in the UK, and it is YouGov, the pollster company that everyone will be looking at ahead of the UK election. The election is set to boost demand there, but the other big business in that company is general market research for companies, and they're cutting their guidance today, and that stock absolutely slammed down the most since 2009 for YouGov in the UK, a big decliner on the London market. CMC Markets gaining once again, the best performing stock on the FTSE 350. Retail traded booming once more post-pandemic, another 7% gain for that one. We mentioned DS Smith, weak results, but it is a takeover situation, so not too much movement in that one. Down the bottom here, you have been discussing Danone doing a capital markets outlook day today. Some of the sales guidance potentially not as strong as people expected over for the Activa and also Evian water makers. So that one is among the large caps declining today. Another big decline I want to bring you is BIC. Now, everyone will know this as the giant maker of biro pens, and it is getting absolutely slammed in Belgium today, down 14%. But it's not pens that are weakening, it's cigarette lighters, according to the company. That's what they're saying in the statement. The US lighter market is declining. Good news for potentially health, but not so good if you're making lighters, and that one is down 14%, a big decliner this morning. In terms of your deals, lots going on. There is a Bloomberg scoop over in the pharmaceutical space. This is Evertech in Germany, hiring advisors to fend off some takeover interest, some hostile takeover interest, according to our deals team, and that one up 10% over in Germany. Tate & Lyle getting hit, spending $1.8 billion on a US ingredients company, according to an RNS that broke a few moments ago, down 6.8% this morning. Investors potentially not liking the payout on that one. And you touched upon earlier NatWest and Sainsbury's. NatWest picking up Sainsbury's banking division. It is pretty small for them, but we are seeing a little gain in Sainsbury's this morning, up 2%. NatWest steady ahead of the BOE later today. Over in autos, a quick look at that sector. We've got some new car registration data out today. It's looking pretty weak, mostly in EVs. We are seeing declines, double-digit declines in some of those registrations, but we're holding pretty steady. Potentially, that is already priced in. Mercedes, Volkswagen, and Renault ticking very slightly low, but not too much action in that one. Then on your morning call's going to bring you ASMI. Now, your last guest did have quite a contrarian call over on AI, saying that's potentially a bubble, but AI is the driver for this stock, ASMI. It is the chip machinery company, not ASML. It's the other one, and it's up 4.3% as Morgan Stanley goes overweight. And then finally, over in airlines, Lufthansa, one of the worst performers today. Stiefel cutting that one. They go to hold from buy. €7 price target, so potentially not too much downside, but it is falling 3% as the long-haul travel market does decline in terms of pricing. That's the worry there. Stiefel cuts Lufthansa today, and it's down 3% over in Germany.
Okay, Joe Easton from our equities team on the Stocks on the Move this Thursday morning. Joe, thank you. Coming up, French Business will get a chance to grill key figures ahead of the election, the parliamentary vote, of course, at today's MEDEF conference. We're showing you live pictures outside Paris. We're going to be live from that event next. The kind of questions that may be posed to France's political leaders. This is Bloomberg.
Markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Welcome back. This is Markets Today. We are 19 minutes into the European trading day. European stocks taking a bit of a move higher, up 0.4% across the European benchmark, with the likes of ASM International over in the Netherlands up 5%, one of the leading gainers. At the bottom of the list, the likes of Tate & Lyle and Danone, currently down 2.6% on an update in terms of its future plans. Let's cross over now to Paris. We are live at MEDEF, the biggest employers organisation in France. Of course, at a moment when we expect businesses to want some pretty clear answers, whether they'll get them or not, from political leaders on the left, the right, and of course in the centre out of France is going to be crucial. Caroline Connat is on the ground for us. The head of France's business lobby has criticised the programmes of both the far right and the leftist alliance ahead of the country's snap parliamentary elections. Patrick Martin of MEDEF says both the National Rally and the New Popular Front are a danger to the economy. Caroline Connat then, outside the MEDEF event, what exactly is being said, and will it chime with France's political leaders? Will it have an impact, Caroline?
Of course, this comes at a very crucial moment, just 10 days before these snap elections in France. The party leaders of all parties are going to be heard by the business lobby MEDEF. Edouard Philippe, former Prime Minister, is speaking right now on stage. And as you were mentioning, Patrick Martin, the head of the MEDEF, has already said in an interview before this conference that both extremes represent a danger for the economy. He actually said that Marine Le Pen's program would mean that France would be totally cut off from the EU, and that she's actually quite different from Giorgia Meloni in Italy, because he argues that Meloni is much less anti-European than Marine Le Pen. For Patrick Martin, the head of the MEDEF, the costliest program is actually the one from the Union of the Left. We actually just saw behind us coming in the leader of the New Popular Front, who's going to be next just after Edouard Philippe being grilled here at MEDEF in Paris. For Patrick Martin, you know, what he was saying is that whether it's Marine Le Pen or whether it's the Union of the Left taking power on July 7, it's as if France was a small island cut off from the world.
Yeah, which it clearly isn't. Caroline, interesting to see these leaders turning up, waiting to be grilled. Interesting that French business does get to maybe exercise its voice. The Institut Montaigne unveiling its assessment of the costs of some of the programs that have been vaguely outlined by some of these political groupings this morning. What is that information telling us about the extremes of some of the spending plans that are being talked about?
You know, the cost of living has been the top campaign pledge for all the parties really here. But of course, having measures to improve the way of life and the way people have access to essential products costs a lot. For example, this measure from the National Rally to cut sales taxes on energy, that's 12 billion euros, another 27 billion euros for re-indexing pensions on inflation. But actually, the costliest program would be the Union of the Left, also according to Institut Montaigne, with this measure of blocking prices on essential products costing as much as 29 billion euros. But you know, the Macron's camp is also presenting, of course, some measures in order to try and convince part of the electorate, of course, and this program also has a cost. They unveiled, for example, one measure which is reducing the stamp duty for first-time home buyers to improve the real estate market in France, and that measure, for example, will cost 12 billion euros as well for public finances. So all these very costly measures, and we're just one day after France was put on a list for excessive deficit by the EU.
All right, Bloomberg's Caroline Connat there in Paris watching that MEDEF coverage for us live. We thank you so much for bringing that to us. Speaking of live, we are about 6 minutes away from the S&B decision. We are going to keep an eye on that for you and bring you the breaking headlines and the market moves that follow. you've been a watcher of this program for the last, I want to say 90 minutes or so, you'll know I'm obsessed with the FX story. And there's two charts that I think you need to know before we get into the eco conversation. That's simply what positioning looks like. You're seeing strength in the Swissy this morning against the euro, the pound, the dollar as well. There's a conversation here about positioning from non-commercial players. They're all bearish. But then you look at the hedging, you look at the options market, the risk reversals. So your bearish positioning shown on that screen there. And you can really see it's being built out in just the last couple of months in a really big way. This is a funding currency as well. So remember, there are ramifications for the rest of G10. Look at the options market on the other hand, which we'll get that chart for you in a moment, talking about risk reversals. And you see the hedging on the upside is also at its highest since October of 2022 against the euro, by the way. So these are 1 week risk reversals that will pull up for you. And that's going to be a big conversation. There are two different stories. This market could go either way.
If they do nothing, has nothing already been priced, I guess is the question. Does the Swiss franc continue to appreciate from here? Or is that, to your point, maybe already to a certain extent in the positioning? I think that's an interesting question.
Yeah.
If they do cut, do we see a big move lower? I think it's going to be interesting. They want that. That's what Jordan's objective is going to be here.
That's not what they're going to get, according to MUFG, who have said, they put out a note saying that even if they do cut, it's unlikely to trigger a sharp reversal of Swiss franc strength. And it ties back to the France story.
That's the problem, isn't it?
And that's the hedging that's showing up on your screen right now. Again, going all the way back, this is how strong that move is. And you mentioned it as well. So much of this is the 1 month move is against the euro. It's really a function of the euro. It's not a function of the Swiss franc just yet. And that, again, it's the euro's ripple effect that's moving.
Do they have to lean in on it, though? Has French politics effectively forced the SNB's hand?
Yeah.
And it's the three kind of member committee going to decide that it's enough at this point to make a decision to cut rates, a second cut, which would stand in stark contrast to a lot of other people.
Is that the strategy then that applies? This is a debate at the ECB, right? What is the effectiveness or the efficacy of consecutive rate cuts as opposed to cut, hold? And it feels like the fact that the S&B is the guinea pig right now for potentially global.
And it's another example of another central bank that arguably is being hemmed in by events outside of its own jurisdiction. It might look at the inflation data. Domestically at 1.4%, but there's events arguably.
And they have a currency problem. They have a carry problem. That's the way the BOJ does.
The S&P is always probably impacted by external events. Thomas Jordan is going to be speaking to us a little bit later after the press conference. We'll bring you that, obviously, a little bit later in the morning. Up next, we're going to bring you the decision. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
authorities.
Could face bigger challenges.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Swiss National Bank cut rates. We are down to 1.25%. The expectation was the rates would stay on hold, at least on the screen in front of me, at 1.5. That has not happened. In terms of the commentary around this, let's see what is happening, because we are trying to work out the reasoning behind this. The expectation probably is that this is down to the fact that we have seen the Swiss franc strengthening. So we get an SNB policy cut to 1.25. It's getting into the habit, it's always been in the habit, of delivering surprises. The Swiss National Bank says it is prepared to intervene in the currency markets if needed. But the first course of action seems to be a rate cut rather than that intervention. That is perceived as being the best policy tool in order to deliver that. It sees 2024 growth targets of around 1%. This is not exactly rip-roaring growth. 2025, 1.5%. But the takeaway, and you can see it in the market reaction, Tom, is a big move. The euro goes higher. 125, the new rate.
Sizable move in Swissy euro. Swissy currently down 0.4%, close to 0.4% on the back of that move. The big question, as we were debating, is to what extent that will continue, given the political risk out of France. And we know that the strength that we've seen since around mid-May for the Swissy has been a challenge, up about 5% versus the euro. Year to date, though, softer by a little under 2%. But currently, you're seeing weakness coming through for the Swissy. And again, the question is to what extent that will be welcomed by officials, presumably so, over in Switzerland. To what extent that does continue, Kriti.
Let's go straight to someone who called it, who's going to be able to say, I told you so. Eric Nelson joins us here, macro strategy over at Wells Fargo Securities. Look, you called it. The positioning was really interesting because everyone was preparing for weakness here. That's exactly what you got, as they just pointed out. But how much of this actually sticks in the context of the read-through from the French elections, the EU elections, et cetera, and the turmoil that has kind of propped up the Swiss franc thus far?
Yeah, obviously the political risk here very much swamps what's going on with rates, I think, for the Swiss franc. We had a pretty substantial carry trade positioning here in Swiss going into this. So, I think some of that has been unwound, but not maybe all of it. Certainly if we get an unfavorable election result in France in terms of, more EU risk, that's going to lead to Swiss franc strengthening regardless of what's going on with Swiss rates. I think what's really interesting here is, that was key about the decision is the S&B, what they really didn't want to do was come in, hold rates steady, have a hawkish reaction, and Swiss franc strengthen even more, and then get an unfavorable election result. They want to have maybe be a little bit dovish. If things go, very well, Swiss franc weakens further, they have that option to buy Swiss, right? So that's really the risk management approach.
And as we're speaking, the S&B is saying they're prepared to intervene in currency markets if needed. To your point, what does that look like, though?
Well, it's probably a threat for rather than action for a very long period of time. I mean, it's in the sense that, the Swiss franc is still stronger on a year-over-year basis. That was something they highlighted in March, that annual change. We're not at a point now where the Swiss franc is suddenly so weak that they're probably worried about, runaway inflation. Domestic inflation pressures are pretty well contained, excluding rent and energy. Inflation's running around 1%, which is pretty much right smack in the middle of the S&B's range. So I think they're okay with the Swiss franc where it is, even if it gets a little bit weaker.
Is there more to come? More cuts?
I think they're going to be very cautious here. I unfortunately don't have the inflation forecast in front of me, but I suspect they have kind of given themselves a little bit of an out here, not committing to any further cuts. I think, 3 months from now, if we're looking at, a much stronger Swiss franc, French election risks, have turned into actual concerns around EU fragmentation. That's something that's probably going to lead to more Swiss franc, rather SNB rate cuts. Everything goes okay, though. Swiss franc calms down and maybe starts weakening again. They can probably take a pass on September.
Given the uncertainty around everything, the world is an uncertain place right now. You see an opportunity today with the Swiss franc weakening. Do you buy that? Is that an opportunity to get in? Is there a danger that you see more strength ahead? The tail risks are growing significantly right now.
I think it's, in the short term here, it's probably too early to buy the Swiss franc. I mean, you want to see what happens in the French election results, right? I mean, if everything goes relatively well, we've just had an SNB rate cut. We know what the reaction function looks like. The carry is still good in the Swiss franc and selling it. So I think it's too early to fade this move. But I think it's going to consolidate here until we have a better sense of what these election results look like.
When do they reach for that additional tool then? What would trigger that move to FX intervention for the SNB?
I think you would have to see a persistent and runaway strengthening, or rather weakening of the Swiss franc, but also some signs that imported inflation pressures are coming back, right? So it's not just what's happening with the currency. We need to see it feed through to actual inflation pressures. And we haven't seen that yet, even with a weakening of the Swiss franc we've had year to date.
With the ECB role as well, and the lack of clarity in terms of where the ECB goes next, how is that likely to factor into future decisions for the SNB?
Well, this is why I think they're going to be relatively cautious. I mean, the ECB obviously cut at their June meeting, but have been pretty guarded around further cuts, right? So in that sense, I think the SNB wants to keep all of its options on the table. Like I said, Swiss franc, if it's weaker in 3 months, the ECB is not cutting. They probably are not in any rush to cut much further here. So they want to keep kind of things as vague as possible for now.
What does that then do in terms of appetite for the Swiss franc as a funding currency? Does that increase it? We kind of went through this exercise with the yen and the BOJ, and they said the similar things. We'll intervene if necessary. The same kind of jawboning you see with the S&B. But in terms of appetite, at a time when we're still looking at that carry trade very much playing a role in portfolios, what does it do?
Well, I think the S&B intervening and the BOJ intervening are very different animals.
Of course.
Right? S&B has far more firepower and far more sustained impact on the FX market. I mean, look no further than the FX move in 2023. The Swiss franc was very strong, and it really had no business being so strong were it not for the SNB. So I think the BOJ, in contrast, they intervene. Everyone's pretty happy to buy the dip in that in dollar yen, right? So I think it's very different. And ultimately, in terms of the franc's sort of appeal as a funding currency in the near term, I think I'm much more focused, frankly, on the French election risk than I am on the SNB.
So I look. Okay, let's game this out. Say we do see an outcome in the French election that causes concern. What is it? You get a big move in the euro. You get serious concern. How does the Swiss National Bank respond? What is the next? Do they wait for the next meeting before they deliver something else? Could we see an intra-meeting decision to take further action if we see further strengthening? Could they could they intervene? How aggressively would they be intervening? I'm wondering if the tail risk comes to the fore, what Jordan and co are going to do.
Yeah, I think I'd say to have the kind of reaction that would elicit a shift from the SNB from buying Swiss to selling Swiss, you need to see, number one, a very unfavorable French election result for EU stability, fragmentation risk. Large majority for either the far left or the far right, and immediate plans to try and go toe-to-toe with the EU. In that scenario, let's say Swiss franc has to strengthen 3-4% in a very short period of time. Maybe the SNB starts to talk about interventioning in the opposite direction. Absent that, I think they probably see how the reaction plays out. I think reality is probably post-election, we're not going to have a great sense of exactly how things play out. Maybe sort of a hung parliament. So Swiss franc probably consolidates, maybe gets a little bit stronger. Not enough to change the SNB stance immediately.
Swiss markets, equities up about 0.5%, about 0.5%, a little above what we're seeing across the broader European equity market. In terms of the stock story and the earnings story for Swiss corporates with that international exposure, is this material?
Well, I think what's interesting is looking at the real trade numbers in Switzerland, right? I mean, exports have actually done relatively well, even despite the real strengthening of the Swiss franc over the past 1 to 2 years. So I think it's a very different environment than it was last year. Certainly, global trade picking up a little bit has helped, but I think the currency has not proved to be a huge hurdle to kind of globally oriented businesses in Switzerland, especially given the global manufacturing recovery.
Is there a haven story here we need to pay attention to? Let's look past the turmoil from the French elections, past the turmoil of what's going on with the S&B as well. 6 months down the road, we're having this conversation in December of this year. What does the Swiss franc look like relative to the dollar? And I'm going to throw in the yen in there as well. Is it still the haven?
Yeah, I mean, it's much more of a I'd say a European political haven and also a geopolitical haven in terms of we look at the reaction to some of the tensions in the Middle East over the past few months. Swiss franc has been very sensitive to those developments, right?
Yeah.
So that's, I think, where it comes into play. If it's a classic weaker global growth broadly, you know, big sell-off and risk, I think dollar probably prevails. But Swiss franc is still up there in terms of the league table of haven currencies.
Okay, Eric Nelson, thank you very much indeed with the reaction, the surefire reaction, as I should say, to what's happening with the S&P and that decision, of course, to cut by 25 basis points. From Wells Fargo Securities, macro strategist at Wells Fargo, of course. We're going to be speaking with the S&P president, Thomas Jordan, after that rate decision, so stay tuned for that. It'll be one of his last interviews, of course, before he steps down from that role. Meanwhile, the Bank of England, of course, expected to keep rates steady later today with the impending UK election, making a move more difficult. The latest reading of services inflation coming in higher than expected, even as CPI fell to 2% in the year to May on a headline basis. Let's get more now from Bloomberg's Lizzie Burton, who's outside the BOE. Lizzie, what are markets going to be watching out for then?
Well, Tom, I can't promise you any of the excitement you've just had from the SNB. The Bank of England decision today expected to be kind of a non-event. I might as well go home. But look, the detail is what's going to matter today. It's one for the nerds. Kriti Gupta, I'm looking at you. I'm going to be combing through the decision guidance that comes out alongside the decision. Is there a sign that they're comfortable with the recent economic data? Yes, you've got headline inflation back at the Bank of England's 2% target, but services inflation yesterday came in unexpectedly hot. So off the back of that, you had a market reaction that was traders paring their bets on an August rate cut, gilt yields rising, the pound rising as well. So I'm interested whether the Monetary Policy Committee is as unnerved by that number when it's backward looking and you've already seen services inflation peaking. Ultimately, it's on the way down. The other detail that I'm going to be watching out for is the vote split. Last time it was 7-2. If it's any more dovish, that could also suggest that August is a live meeting. But as you say, look, we're not expecting a rate change today. We're also not getting a press conference or updated forecasts. The Bank of England really would like to stay out of it at this meeting because of the election. We've had no Monetary Policy Committee speeches since that election was called. But frankly, it's quite odd that you've got inflation at 2% and interest rates at 5.25%. And if they don't cut this summer, maybe they'll miss the chance to do it if you see inflation rising again before the end of the year.
Keeping an eye on the vote split, the governor's always told me they do definitely use that as a communication tool. Lizzie Burton outside the Bank of England, thank you very much indeed. What are we going to do next? Norway ramping up its defence spending. It's reassessing, of course, the threat from Russia. We're going to speak to the country's defence secretary. That's the deputy defence minister, effectively. That interview is going to be next. This is Bloomberg.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago. because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, a million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Russian aggressive war in Ukraine, we see that there has been a wake-up call, I would say, in Europe, in the world, that we need the defense. The investors are eager to talk with us. You see a shift from certain funds, actually. As I mentioned, there has been, I would say, before the war, there was special funds that's saying that, okay, we're going into the more sustainable green part, and then went out of defense. We see some of them coming back now.
That was the Kongsberg CEO speaking to Bloomberg's Oliver Crook earlier today as Norway ramps up defence spending. Let's cross back to Ollie, who is on the ground for us at that factory, the new Kongsberg missile plant, and standing by with another great guest. Ollie.
Yeah, Tom, as you say, the longest day of the year here in Norway, a big day for Kongsberg and Norway in the defense industry. And behind me, you see the sort of naval strike missile inactive, but behind me also the very active Deputy Defense Minister of Norway, Anne-Marie Unoret, who joins me now to discuss this opening of the factory and Norway's defense situation more broadly. So I'd like to start, if we may, just sort of putting into context the importance of this facility, particularly in the context of Norway's defensive plans.
So for 2.5 years now, Norway, together with other allied nations, have donated substantially to Ukraine in order to support them fighting off Russian aggression. And there is a need for us to replenish our stocks. At the same time, we need to be able to continue to support Ukraine and build our own armed forces. And we have very recently, just last week, adopted a new 12-year plan for the buildup of our armed forces. It is a very ambitious plan, and in order for that plan to be successful, we need industry capacity that matches the new level.
And do you think that industry capacity does match that level? Because as you say, it's not just supporting Ukraine, it's building up the own sort of NATO alliance to the tune of probably trillions of dollars for the years to come.
There is a realization in the entire NATO community right now that our industrial capacity in the Western Alliance does not match the demand right now. Therefore, there is a great need to expand production capacity in the defense industry in the entire alliance.
And how much does the sort of future of that defense agreement, NATO, and the potential election of Donald Trump in the United States come into your figuring? Does it change how much money you think needs to be spent on defense here?
Norway's plan is based on the deteriorating security situation in Europe, resulting from Russia's aggression in Ukraine. And we realize that Norway needs to strengthen our armed forces. And we also realize that Europe needs to take a greater responsibility for our own security. And this defense plan does exactly that.
And then in terms of sort of the conversations that you have about sort of Norwegian defense and the meetings that you have, obviously one of the main concerns is the oil and gas fields that are quite near to Russia. Are those coming into under pressure? Are you seeing sort of drone interference? Are you concerned there?
Well, the deteriorating security situation affects all of Norway and all of our security matters. So that is one aspect of it, but it is not the not the most important aspect of it.
And in terms of one of the sort of, I would say, accidental beneficiaries of the war in Ukraine has been Norway, insofar as you guys are sort of the main provider now of oil and gas to Europe. Do you think that there's a greater obligation that Norway has to actually do even more in terms of securing European collective defense?
Norway has a moral obligation to support Ukraine, as has every other European nation, and we recognize that obligation. And in January last year, Norway adopted a 5-year, $7 billion fund in support of Ukraine that has unanimous support in Parliament, which at that time was a very large support package.
And then, Russia's also gone into sort of full-blown war economy. Do you think that Europe needs to take some lessons out of that book and needs to adjust not just in Norway, but more broadly within Europe?
As I said earlier, there is a realization in the NATO community that we need to expand our industrial base in order to be able to meet the current security situation and the needs in the alliance. And Norway has taken its part, among other things, by doing this, expanding our missile production, and I think it's important that other European countries expand their production as well.
And this also just trying to understand kind of strategically the areas that you're trying to strengthen within the military. Where are you allocating those resources? Is it sort of more naval, or where are you looking at the threats?
We are making substantial investments in our maritime forces. We are renewing our entire surface fleet, as well as investing in more submarines. We are also making very substantial investments in air defense. We are doubling the number of NASAMS batteries and also investing in long-range air defense systems. And we are also expanding our army and other land forces substantially.
Anne-Marie Onere, thank you so much, the Defense Secretary, the deputy here in Norway, at the opening of the Kongsberg factory, where they build these sort of joint strike missiles and naval strike missiles here in Norway.
All right, Bloomberg's Oliver Crook there, as he was really talking about the ramp up that you're seeing in the defense sector as a response to the geopolitical risk. And that's the conversation we want to continue from a different perspective, from the insurance business perhaps, as insurers warning business to build resilience with the year of unpredictable elections, rising geopolitical risk, and of course more frequent climate events. We've got the perfect guest to dive into it as well. Joining us now right here on set, Sierra Signorelli, CEO of commercial insurance over at Zurich Insurance. A pleasure to have you on the program. Thank you so much for coming in studio. Walk us through what you're seeing from your perspective. There's these rising risks. There's a lot of real fear, not just in terms of the investor community, but especially when it comes to things like that geopolitical risk that Ollie was just talking about. Where do you stand on that?
Yeah, so I mean, it's an interesting time. There's no shortage of risk. It's not a benign risk environment, but there's an opportunity with this. I mean, from an insurance perspective, we see so many different risks over time, and when we see over 5 million claims a year. We pay over $22 billion in losses every year. And I think the opportunity that we have is to share some of our experiences, especially as we see risks evolving, and help companies become more resilient. There's no reason that we need to learn lessons twice, 3 times, or 100 times across every company that takes on something new. We see this with the transition as an example. I mean, even something as simple as installing solar panels. We've seen years ago when companies started putting them on the roofs of buildings that you would see that, if you install them the wrong way, you can set a building on fire. And if they're not properly angled, the wind can do damage to the structure of the building. And so taking those learnings and sharing those with our customers around the world so that we don't make those same mistakes twice. And that's important from a risk perspective, even for something as small as solar panels, because it allows us to reduce the cost of risk, which is important.
In terms of the risks you're seeing, how many more high-impact events are we seeing? Is the science telling us that there is going to be more, that it's going to get worse from here? What is the message to your clients in terms of the kind of the growing, burgeoning risk that they face from the climate story?
Yeah, no, that's a great question. And a lot of people are talking about we're going to have an increased hurricane season this year, which is historically the way we looked at it every year. The fall would come and we would think about, is it going to be a hurricane season or not? The challenge we see now is we see storm events, weather events all year long. So if you think about last year, I mean, it was one of for secondary perils, which is what we call events outside the big hurricanes. It was the most impactful year on record. And then this year, we're already seeing, you see, before we head into the hurricane season, we're already seeing in Germany, we've seen floods. In Dubai, we've seen floods. In Brazil, we've seen floods. We saw gargantuan hail in the U.S. So you're seeing more frequent, different weather events all through the year before we even get to hurricane season. So the environment has changed significantly, which is why it's really important for us to focus on building resilience with
you're painting a picture of something like Dante's Inferno. So the demand there is there, clearly, given all the challenges. What does that mean for premiums? Premiums have been going up. Do you expect that trend to continue?
So premiums have been going up because we've been seeing more and more events that are happening and in a broader geographic area than we have historically seen. So one of the things that we're focused on, and we launched a couple of years ago, services associated with using our risk engineers and other experts that we have to help our customers understand their exposure to climate. And to do that, it's understand what are their flood exposures and how do they prevent, as an example, flooding at their facility. And so this allows them to take simple, kind of pragmatic approaches to removing things from basements that are critical materials or expensive equipment, or maybe even creating diversion channels around their facilities so the water runs off. Okay. So it's taking some simple steps and then working with them, even if they're building a new location, to think about how do you construct something in a way that'll be more resilient in the long term.
Sierra, thank you very much indeed for joining us on set. Sierra Signorelli, the CEO of Commercial Insurance at Zurich Insurance, on how the industry and clients are adapting to these climate crisis challenges. Just checking on the markets, you're seeing modest gains of 0.4% across the European Stock 600. Across the sectors, construction at the top of the list, gains of a little shy of 1%. Real estate also up there. On the downside, food and beverage and personal care. Futures in the US pointing higher.
Big story this morning has been the S&P.
Yep.
We've seen a rate cut, which is a surprise, 25 bips coming off there, so we're down to 1.25. We're waiting for the Norge Bank. Got a few other events coming up a little bit later on in the day as well. We're going to wait for that Thomas Jordan press conference. A few things coming out of the States that are worth paying attention to. I think we get ECB accounts today as well. So there's plenty on the agenda, but the story is the S&P has cut rates.
The story is the S&P has cut rates. The Swiss franc continue to be weaker across the dollar, euro, pound as well. You are, however, we're keeping an eye on the NOK. The presser for the S&P coming up in just a few seconds, as is that Norges Bank decision. It does it for markets today. The Pulse is up next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Decision day for the Bank of England. Investors bet rates will remain at their 16-year high until November after inflation slows to 2% for the first time in almost 3 years. The revival of European IPOs is faltering with the political turmoil in France hitting equity markets. We discussed that with the Euronext chief executive, Stéphane Boujnah. Plus, more of our interview with Jim Ratcliffe, the UK billionaire and co-owner of Manchester United. He warns the Premier League is in danger of ruining its position as the world's richest football competition. Now, we'll talk about football in a second, but first thing is first, let's look at the European markets map. Now, there is quite a lot of news out there. First of all, it does seem that European stocks are strengthening. This is after the Swiss National Bank, the SNB, delivered an interest rate cut in a busy day for monetary policy officials in the region. Now, policymakers in Switzerland cut borrowing costs for the second time, basically saying that inflation pressure has decreased again compared to the previous quarter. The Swiss currency fell in response, and if you look at euro, also easing some 0.4% versus dollar. Now, a couple of other things we need to watch out for. Of course, today is BOE. We won't get a speech, but the Bank of England expected to keep the rate unchanged. And then Norges Bank also coming out, leaving that benchmark interest rate at 4.5% as expected. Now, in France, a big piece of news in France because the Treasury preparing there to sell as much as 10.5 billion euros in bonds for the first time since the President Emmanuel Macron shocked markets by calling a snap election. So I did tell you that it was a busy day. It is. The Swiss National Bank, again, cutting borrowing costs, again, to loosen constriction on the economy and stem gains in the franc, a move that contrasts with the hesitancy of global peers over easing. So joining us now is the perfect guest. We really planned this. The head of BlackRock Investment Institute, also a former central bank official, Jean Boivin. Jean, what a day to have you on. I mean, it's a big central bank day, and I don't know whether the driver is actually, the fact that there's two kinds of central banks right now, the ones that want to cut and the ones, the Fed, the BOE, that are a lot more tentative.
Yeah, I think the starting point for me is that there's a big anchor, and it's the U.S. The U.S. is the Fed was very willing to try to engineer the start of an easing cycle this year. We've been very skeptical about this happening. This is certainly have been delayed. Other central banks, like we've seen today, can afford to cut somewhat, but we think they're going to be limited because that Fed situation is going to be a constraint for every central bank.
So, Jean, how do you see the Fed developing? And actually, is there a danger that inflation kind of slowly comes down, but then really picks up by the end of the year?
I think this is a bit of the baseline scenario for us. Is we see reason for inflation that continue to appear to go down somewhat, but underneath that, there's like real ongoing pressure, partly from services. And I think we're going to see the Fed getting close to the election. It's going to be a window that's going to close in terms of cutting rates. And by the time we get to the other side, inflation might be showing more persistence, even more than right now.
So do you think they cut?
I think if you have to make a likelihood of what's going to happen, I think one cut this year is pretty likely. But beyond that, I think it's difficult to see much more happening.
Why are we not talking about interest rates actually rising? Is that something for 2026, or is it just because you take it off the table?
I think it's a great question because if you take it just purely from a public policy objective, the risks are pretty evenly balanced on both sides of inflation, and you should keep some probabilities of hiking in a world like this. I think the reason why we don't put too much of a probability on this is because the Fed itself seems to be pretty much set to cut rates. There's such a willingness to move in that direction. They've signaled so strongly then I think it makes it less likely as a result.
It's less likely, but could it be a policy mistake that they're not even talking about a possible hike, given the question marks about inflation?
I mean, in principle, it could be. I think at the end of the day, I think it's not much more hiking we would need anyway. So I think it's going to be more about the time at we can keep it there and for how long. So I think they can manage by holding it there as opposed to just hiking. So it's not a big risk if it won.
Jean, what will support these markets? So I don't know whether you're looking for a catalyst or just like, an anchor for it not to drop.
So for the market overall, I think the macro environment, both central banks, and if you think more broadly about inflation growth, that's not really the tease as a story for being bullish on market. I don't think it has been for the last few years, and we don't see that as being the story going forward. It's not an environment where macro is going to be your friend. Instead, it's more about these mega forces like AI that is really powerful. We clearly believe there's something big happening there, and that's where we see the reason to be on bullish, overweight risk assets. So it's not so much about macro and central banks like it was for many decades, but now it's more about these big forces at play.
So again, AI, I don't know whether the stocks are priced to perfection and close to a bubble. I know NVIDIA pre-market is gaining, again, 4.1%, now the most valuable company in the world. Is there a point where you say, actually, they're just too richly valued?
Yeah, I mean, when you look at these specific companies and so on, it's pretty spectacular what you're saying. You put it on a chart compared to other, growth companies over the history, and it stands out. So, I mean, that leads you to ask some questions. But at the same time, I mean, I think there's a real story. You look at earnings projections for these companies, and you look at the pricing. It's not like 2001. It's really, there's something behind that. Of course, we will see market that probably will get overextended at some point, but we are still comfortable with the overall valuation we're seeing there.
So I think you're overweight tech and the AI theme. Is it more Europe? I mean, Europe, just because of the nature of the economy, the proximity to some of the wars, valuations are a little bit lower. Is that how you play it, or you just go for the big seven in the U.S.? Actually, maybe the big six?
Yeah, or five, or we'll see. But yeah, no, it's mainly the U.S. Still to this day. I mean, it's true from a valuation perspective. You see more opportunities in Europe as a result, but the AI team is playing first in the U.S. I think a lot of investment is happening there. CapEx is being deployed. It's going to be pretty significant, and I think and there's a U.S. pole of attraction that is pretty strong there. So it's U.S. first. I think Europe eventually will benefit, but it's less clear for us now.
Yeah. But what industries will be disrupted the most? And again, can you play AI through disruption in industries, or is it a little bit too soon?
The other point I would make on AI is that we believe it's a big story. How it's going to play out is, I think this is the biggest uncertainty we probably faced in my professional life. It could be extremely fast. It could be very low. Everybody's trying to make sense of it. So big uncertainty, I think, and the big question is how much is going to be augmenting labor as opposed to replacing labor. And that, I think, we're watching. So it's more about right now looking at the companies that can extract profits from the situation. The knock-on effect, I think, is going to be something we need to watch, and not the time to play it just yet.
Jean, overall, what region? I mean, I know you like the U.S. quite a lot. Do you believe that there could be, the end or a slowdown of U.S. exceptionalism? And does that impact the markets, or is it a longer-term kind of protracted story that we could see play out?
Yeah, I think it is the case that I don't think that reality has really sunk in markets yet, that we're on the other side of COVID now on the track globally that is much weaker than we were pre-COVID. The U.S. is the exception, so it's the one that is doing the best. But even the U.S. is on the slower track. So I think there is a structural story of slower growth, demographics being behind that, high debt. AI is the offset to this, so we'll see how it plays out. But in terms of other regions we are interested, Japan is for us the place where we have the biggest overweight right now in terms of risk asset equities. And the reason there is because that's the only place where we see the macro environment as being your friend, as opposed to other places.
And the U.S., how difficult is the U.S. to read, given we're also in a U.S. election with quite difficult blueprints, although no one's talking about the debt?
That's the elephant in the room, right? And it's very surprising that everywhere globally we have this is the year where they're going to be the most voters going to vote, and that fiscal policy is nowhere to be seen in any of these debates in every country. When does it come back to the fore? I think this is going to be a big question. I think it will come back at some point. But when you think about the outlook for the U.S. in particular, both parties, no matter what happens, we're going to see in a high-spending world adding to a pretty high debt already. So this is why we think over time, long-term rates continue to go up, need to adjust upward, and long-term fixed income is a bit more cautious for us.
Do you worry about treasury auctions in the U.S.?
Well, I think we're going to learn a lot about the ability of the market to absorb these auctions because there's a lot coming through. I'm not worried, but I think we see that as being a catalyst for higher rates at some point.
Jean, France, I mean, that's, the snap election certainly sent nerves across markets. How do you see that playing out, for investors? Is there an opportunity to get a good deal on cheaper French bonds?
Well, I think for now, I mean, the range of outcomes is much higher than it was before we got the snap election being called. So I think it's normal for the market to price in wider spread for France, as it has been the case. I'm not saying like that being dislocated in any way so far. I think the risks are real. As we learn more about what the second round landscape would look like on the lead up to the election, then there might be a room for adjustment. I think the place where there might be more of an opportunity is on the equity side, because I think the rate side, I mean, there's a reason why they should adjust. On the equity side, European equities are not necessarily that concentrated on the European situation per se. There's a lot of global drivers, and there's a good chance that the equities will overreact to the election risk.
And so it's a good buyer opportunity, actually, if you want to get into French equities.
We're neutral, but I think this is one place where we're going to see an opportunity probably to step in if we see more aversion and worries start to move markets.
I mean, it almost sounds boring talking about the UK, given the relatively stability for the moment. Although we have an election, we don't know whether there's a majority or there's some kind of also having to share power. What's your take on UK assets?
Well, in the UK, it is indeed, compared to 2 years ago, 18 months ago, I wouldn't necessarily have expected the UK to be in a situation where inflation now seems to be, progressing well, better than other places. I think that makes, the outlook a bit more positive in the UK. We're going to see the Bank of England today. Yeah. Don't expect a big move, but I think they are in a position to cut eventually more. So that could be a positive catalyst in the UK.
I mean, we haven't really talked about geopolitics. We haven't really talked about private credit. But is there anything that makes you a little bit uneasy that the market is not talking about? I don't know whether there's liquidity concerns, but something that could actually, surface.
I feel like the stance of most clients we have of the market is pretty cautious to start with. So I don't feel a need to emphasize like a big tail risk. I think that's pretty much in the mind of people. I mean, the risk is that inflation is not as settled as most people expect, and that could be a bit of a wake-up call if it happens. So that would be the place I would be a bit more worried. But I think that's also well understood.
Jean, thank you so much, as always, for coming on. That was Jean Boivin, Investment Institute, of course, Director of BlackRock. Now, coming up, will there be a revival of the IPO market in Europe? We'll discuss that with the Chief Executive of Euronext. That's next, and this is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome into the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, volatility in Europe is forcing some companies to rethink their IPOs. Now, luxury footwear maker Golden Goose pulled its listing in Milan this week, and Spain's Tandem Brands is reportedly postponing its IPO until after the summer. And Paris, meanwhile, has lost its spot as Europe's biggest equity market to London, less than 2 years after winning the title. I'm sure there's going to be some pushback. Now, joining us now for an exclusive conversation is Stéphane Boujnah, the chief executive of Euronext. Thank you so much for joining us, Mr. Boujnah. First of all, what kind of market do we have? So are we seeing green shoots of M&A, or are, the IPOs being pulled doesn't bode very well in terms of trends for the future?
Well, I mean, overall, the market, I'm quite confident in the big picture. Here and there, we have a few companies that decided to postpone their IPO plans, but in reality, the IPO pipelines for Euronext, as it is for most of our colleagues across the continent, is very thick, and we are confident that 24 will be a very good IPO year. Things are transitioning in the right direction.
You're also celebrating your 10-year anniversary of being IPO'd yourself, Euronext, so congratulations on that. Do you think any of the IPO postponements had to do with the French market turmoil?
I don't think so. I mean, there is some questioning, or there are some concerns because France is not used to snap election. It's very unusual. But at the end of the day, things will clarify in 2-3 weeks' time. So I don't think it is something which is fundamentally and structurally a source of concern.
But is there a concern? Do you have concerns? Emmanuel Macron rolled out the red carpet. I remember, senior bankers in London saying, we're going to lose people to France. Is there a concern that if there's a new government, when there's a new president, actually you lose some of the good stuff that you've had so far post-Brexit?
I don't think so. All the schemes that have been deployed, put in place, enacted to make France a very attractive place in terms of foreign investment have been there or have been deployed over the past 20 years through very different governments. They are part of the fabric of the French economy. I'm not concerned about these rules being dismantled in any way whatsoever.
So do you think all of this market volatility will be short-lived?
Yes.
Why do you say that?
No, because I think things will stabilize. We are just in the middle of the campaign. There are uncertainty. The outcome of the elections are not clear. Rational people will prevail ultimately, because the closer we get to the elections, the less buzz and the more fundamental votes. And in any event, after the 8th of July, things will stabilize in a much more clearer environment. So I think it's not a fundamental structural source of concern.
I mean, the Total chief executive was pretty punchy, saying, look, he's looking at whether, reviewing whether it's better to list elsewhere because of, I don't know if it's a lack of capital or certainly this very green sentiment in Europe that he believes could be holding the Total share price back. Do you think such moves will be more prominent?
No, we are working with Total, and they have no plans to move their primary listing that will stay in Europe and on Euronext markets.
You know this for a fact, or because I thought they were
doing the review? No, that's what they themselves stated at their general meeting. Oh. What is true is that they have a fundamental valuation gap, which has nothing to do with markets. The liquidity of the total stock is much bigger and much stronger in Europe than in the US. It's not a liquidity issue. It's a valuation gap for one simple reason. European investors do not like any more oil and gas, whereas US investors do like oil and gas, and the valuation of the peers of Total is much higher than the valuation of Total, because the investor base in the US of Chevron and ExxonMobil is much higher. So the question for Total is how to capture more U.S. investors because U.S. investors like oil and gas. European investors do not like oil and gas. That's the only point.
It's a big point. I mean,
it's a big point. It has to be respected, etc. Yeah. But the listing venue is not the solution, and we are working with them to all sorts of mechanisms and schemes to fix the problem. And I think there will be a solution that will be found and will be convenient for the board and the shareholders of Total.
But so you see this as a real problem? That also, I mean, we've also heard, some rumors about Shell possibly looking at the same. Do you see a problem of, some of the big commodities, big oils leaving Europe, and how do you attract U.S. investors to Europe?
There is a big difference between the London perspective and the continental Europe perspective. Euronext, as you mentioned, it was created 10 years ago, was re-IPO 10 years ago, and so the big difference between now and 10 years ago is that today the aggregate market capitalizations of companies listed on Euronext is about 7 trillion euro, which is twice the size of the aggregate market capitalizations of companies listed on the London Stock Exchange. The average daily volumes on Euronext in terms of equity trading is about 10 to 11 billion, so it's about twice the size of the equity trading in London. So in London, there is a debate on liquidity.
Yes.
In Europe, there is no debate on liquidity. Because we have a single liquidity pool by Euronext, a single order book, which is deep and liquid.
But Shell
there are issues on valuation.
Concerns.
There are issues on multiples, which is totally different from the stock exchange and totally different from the liquidity issue. The issue is valuation and the size of the equity market. And what we need to fix is something which is broader than the exchange, which is how to make European equity great again. MIGA, how to make European equity great again. And there are all sorts of initiatives.
Sauce, what would you do? One thing, the first thing you would do?
Total change of prudential ratios for institutional investors and total change of tax incentives that drive savings towards a public debt rather than equity. Prudential ratios, because 10 years ago, there was too much risk in portfolios, and that was the macro problem that led to the strengthening of the prudential and solvency ratios. Today, the macroeconomic risk is not too much risk in portfolios, is not enough risk in European portfolios. And that would be definitely a way to move forward.
Stéphane Boujnah, thank you so much for joining us today. That was, of course, the Chief Executive Officer of Euronext. We'll have plenty more ahead, and this is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is a Pulse, and I'm Francine Lacqua here in London. Now, there's quite a lot going on in terms of currency and market moves because we had two big central banks actually come out one cut and the other one did not. Now, the S&P cut rates again. This is to aid the economy and try to help some of the gains in the francs or stem some of the gains in francs. Officials in Zurich actually lowered their benchmark by 25 basis points to 1.25%. Thomas Jordan, the president, said that the underlying inflationary pressure has decreased further compared with the previous quarter, owing somewhat lower second-round effects. So that's one thing to watch out for. We did also have a bit of moves on krone. Again, krone has been gaining. It seems now that markets have placed the bet that Norway is sticking with its policy rate for 2024. Now, this could always change, but the statement part that was interesting is they say that if the economy evolves as currently envisaged, then the policy rate will continue to lie at 4.5%. And then, of course, we have the Bank of England later, no change expected in rates. NVIDIA, though, shares rising as much as 4% in pre-market trading. We had a great conversation about AI and AI stocks with Jean Boivin from BlackRock. Coming up, why Manchester United's billionaire co-owner fears for the future of the Premier League. The exclusive interview is up next. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
morning, everyone, and welcome to Bloomberg UK, a special focus on the biggest challenges facing the British government, the economy, financial services and markets. I'm Francine Lacqua here in London. Now, the Bank of England is expected to keep rates steady later today, with the impending UK election making it a move more difficult. The latest reading of services inflation came in higher than expected, even as CPI fell to 2% in the year to May. Well, for more, let's bring in Bloomberg's Lizzie Burden, who's outside the BOE today. Lizzie, also with a bit of sun. So it doesn't look like we're going to have a huge BOE event today.
Yeah, it's billed as a non-event, Francine, but let me tell you what might move markets around this decision. It's a non-event because of the general election. We haven't had any speeches from the Monetary Policy Committee since it was called, but there could be some interest from, first of all, the guidance that comes out with the decision. Do they signal, actually, that they're quite comfortable with the data, despite that services print? You had traders paring their bets on an August rate cut off the back, but you might actually see the MPC deciding, hey, this is a backward-looking figure, and the trend is that services inflation is coming down. It actually peaked last year. Also, look at the vote split. If you get a more dovish split than the 7-2 we saw last time, maybe that would suggest that August is going to be a live meeting. But I think it's important, Fran, just to step back and think about how strange it is that headline inflation is back at the 2% target, and yet we're expecting the Bank of England to keep rates at 5.25%. It's a strange one. We're not expecting the same excitement as the SNB, but this is the decision that we're looking forward to at 12 p.m. London time.
Yeah, we're going more the Norwegian style than actually the Swiss style. So polls also suggesting, Lizzie, Sunak's Tories are really on course for a wipeout.
Yeah, another poll in this direction, 3 of them suggesting it. YouGov actually saying that this could be the worst defeat in the Conservatives' history. And one poll saying that Rishi Sunak, the Prime Minister, even could lose his seat. I think it's interesting, Francine, that the narrative is changing because of the polls. Usually it's the other way round. And you even had ministers like the Defence Secretary, Grant Shapps, out on the airways, not talking about trying to win this election, but actually talking about trying to scale back the defeat. That is marked a really noticeable shift in the language around this election. It's looking bleak for the Conservatives, and at this point they've only got 2 weeks to move the dial.
Lizzie, thank you so much. Our Lizzie Burden, of course, outside the Bank of England here in the city of London. Now, London has regained the top spot as Europe's biggest equity market from Paris. The French president's decision to call a snap election triggered a sell-off last week that wiped about $258 billion from the market value of French companies. Bloomberg's city editor, Catherine Griffiths, joins us with the very latest. Catherine, I mean, we just spoke to Stéphane Boujna of Euronext. I mean, he pushed back in the sense like, well, that's true, but there's other things that we're doing bigger in terms of capital pool or things like that. I mean, does the size of the stock market really matter?
So I think it probably doesn't really matter in the sense that the sort of value of companies one day to the next moves around, and it doesn't necessarily tell you a huge amount about the sort of long-term direction and worth of those particular financial centres. But of course, symbolically, it matters hugely. And I think the London Stock Exchange was pretty upset when it lost its crown as Europe's most valuable stock exchange, and obviously is pretty pleased now it's back up there. For how long, we're not sure, but there's a symbolic value to it, I think.
Is it also the strength of the UK, or is it really just the weakness of France because of the snap election, so that, relatively speaking, we're like, a better house in a bad neighbourhood?
Yeah, I think this time round it is certainly the sort of weakness or the problems in France, undoubtedly, that has shifted the dial. But I guess here in London, there are things that are looking fairly positive. We had the Raspberry Pi IPO, which was really good. People were very positive about that. We may get Shein coming to list in London, most likely, which would be a huge valuation for a company. I suppose when you then get into questions as to what do we really want for our stock exchange? Do we want companies like Shein, undoubtedly a massive success, but are we really searching to try to create the sort of companies of the future, the sort of huge tech type companies that will really sort of drive the world's economies in the future?
So, Catherine, because we have the election, and actually Lizzie was talking about the polls, that it looks very likely, or it'd certainly be a surprise if Labour don't come into power. What do we know about what they want to do with UK listings?
So they have kept reasonably quiet about their specific plans, but I think we expect them to do various things that really the Conservatives have already kicked off to try and make listings easier and more attractive for entrepreneurs in this country. Basically, we need to boost liquidity. We need to boost those valuations of London companies, and that's the same issue really in Europe too. So how do we do that? And it is around attracting those sort of startups that may be the really valuable companies of the future.
But is there a liquidity problem or a capital, is it risk-taking actually that we need to look at? That it's about attracting capital, either domestic capital or actually international capital?
Yeah, so I suppose it's both domestic and international, but I think the kind of the levers that the UK government of the future from July can pull are around those domestic capital pools. So we've heard a lot about pension reforms, and I think Rachel Reeves, the Shadow Chancellor, assuming she does become the Chancellor, is very keen to try to use that huge pool of money, and then it's about retail investors' capital as well. And so, yes, the question of risk-taking comes into it, and it's whether people are prepared to accept that sometimes they will make some losses on investments, but perhaps there'll be an upside as well.
Which seems counterintuitive, right? If you have a Labour government actually wanting to be a lot more risky with people's pensions, whilst at the same time protecting workers' rights.
Yes, and actually I think that's going to be a huge issue for the Labour government. They want to do so many different things. They want to protect workers' rights, but they do want to have growth. They want to have far better regional areas. It's going to be very difficult when it really comes down to concrete decisions to tick all of those boxes. And so how do they prioritise?
When you speak to entrepreneurs, and of course the City of London, kind of grandstandees, do they worry about, what do they worry about under a Labour government?
I think they worry, I think probably more than anything, the sort of idea of stability is more important to them than almost anything else, and they think they're going to get that. But they definitely worry about taxes. They worry about this notion of sort of a secret plan in some capacity. And then there's sort of these quite sort of specific issues, I suppose, around things like private equity and how their carried interest gets taxed.
And so stability just because the Tory party seems so divided? Or is it because, again, they think that actually, the Labour government is here to stay for a while longer?
Yes, so probably both. I think that they think perhaps Labour will be here for a while, and Labour has rammed home the message of stability. Rachel Reeves has rammed home that message about fiscal responsibility, and they think that's more important than anything.
So I know we did a podcast together talking about Shein, which is extremely interesting because it's, it has many problems. There's ESG concerns, the fact that maybe it's not sustainable, but actually we understand that Labour would be quite in favour of them listing in the UK.
Yes, so I think that goes to this point about competing objectives. Shein could be worth £50 billion. It's a decent IPO. But yes, down the line, Labour will no doubt come under some sort of scrutiny about this kind of shiny new listing in London's environmental record and workers' rights, and that is very much going to be a problem for the Labour government.
And all with limited finances, I guess. For again, if they're trying to do a lot, will they take care of the City of London because their finances, I guess, elsewhere, NHS are strapped because they're not going to necessarily find any new money?
Yes, I think they will take care of the City of London. I think they very much see the key to unlocking growth being this sort of sense of public-private partnership. Labour governments in the past have come unstuck on public-private partnership, but I think they see a way to sort of bring the two together and see kind of rapid investment into infrastructure and sort of that sense that these services and these areas of the country are kind of crying out for investment, and that it can kind of be done in a reasonably rapid way.
Thank you so much for all of your insight. That was our city editor, Catherine Griffiths. Now, coming up, more from our exclusive interview with the billionaire businessman Jim Ratcliffe, the Manchester United co-owner, talks football regulation, money, and the challenge of multi-club ownership. That's next, and this is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers. To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the
perspective and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
The billionaire co-owner of Manchester United has warned those running the Premier League they are in danger of ruining the world's richest football competition. Well, in an exclusive interview, Jim Ratcliffe discussed his opposition to the incoming UK football regulator as he aims to turn around the fortunes of one of the world's most famous sporting clubs.
I just think the Premiership needs to be careful it doesn't get itself into an endless legal wrangle with, lots and lots of clubs, because at the end of the day, the Premiership is probably the most successful sporting league in the world, certainly the most successful football league in the world. And we have this expression up north in England, if it ain't broke, don't fix it. And, you have to be careful if you start interfering too much, bringing too much regulation in, and then you finish up with the Manchester City issue, you finish up with the Everton issue, you finish up with the Nottingham Forest issue, and on and on and on. And if you're not careful, the Premiership is going to finish up spending more time in court than it is thinking about what's good for the league. And, we've got the best league in the world. Don't ruin that league, for heaven's sake. And then there was all this conversation about anchoring, and, what would anchoring do? Anchoring would that would inhibit the top clubs in the Premiership. And the last thing you want in the Premiership is for the top clubs in the Premiership not to be able to compete with the Real Madrids, Barcelona, Bayern Munich, PSGs. I mean, that's absurd. And if it does, then it ceases to be the finest league in the world. So people have to be... And then we've got the government regulator. We're now talking about a government regulator coming in. And they, if you've got a government regulator, at the end of the day, they'll interfere. And that won't be good. So... I have a few concerns about the Premiership in that, when Richard Scudamore ran it, it was a really fine league. It was very successful. And over that, I don't know how old the Premiership is now, 15 years, it became extremely successful. And then everybody starts interfering and messing about. And that's, my view, is not good.
So do you worry about the people in charge? Is it a personality concern about?
No. It's not about. I don't know how they drift. I've only been in football for 6 months. So what
you've been following it for a long time.
yeah, that's true. No. I know Alison. She's a very sensible lady and what have you. But no, I think that drift into complexity that's unnecessary. I think people just need to stand back and think about whether that's good. They should remember what the Premiership's about. It's the best league in the world, and that's the focus, is keep it the best. And it's got the most income in the world. So, for the UK, we get We get the best players coming to the UK. We get the best coaches coming to the UK. We get the best football in the UK. I mean, it's very different to French football. We obviously own Nice down here. You know, Premiership. Everybody in the world follows the Premiership. Everybody in the world knows who the middle clubs are in the Premiership. Right? Everybody knows a bit about Fulham and Everton, and not just the top six. But in France, that's not the case. In Italy, it's not the case. You know, people don't know about the small clubs, or, you know, the medium-sized clubs in France. So the Premiership is a real jewel. Leave them and mess about too much.
What will you do with Nice?
Well, I think, I mean, of all things that happened, we weren't anticipating that we would both finish up in the Europa Cup, because up until Christmas, Nice was a very close second in the league to PSG, so we were anticipating they would be in the European Cup. And of course, United, up until the last game, were not in any of the European leagues. So for them both to finish up in the same league was quite... I mean, it was fantastic news, obviously, for Manchester United winning the FA Cup. But
do you understand the rules, or have you spoken to UEFA about what happens if you're
It just means you have to
face
put Nice into a trust, basically, for a year. So it's hands off for a year, basically. I mean, I get some of it. You know, I think the public perception of you know, a common owner owning two different clubs in the same competition, they want to feel comfortable that there's no interference of any. I mean, why would you ever interfere? I don't know.
Well, that was Manchester United co-owner and Ineos founder Jim Ratcliffe speaking to me about football regulation in England and the challenge of owning stakes in two clubs in the same competition. Now, let's discuss some of Ratcliffe's comments with Bloomberg's David Hillier, who's in the room with us, who got me prepped also on all things football. David, it was really interesting hearing him talk about the Premier League, because and his, you know, his comments really widely resonated, because he's basically saying, watch out, because we're going to lose out.
Yeah, I think, I mean, he was very forthright. And, you know, nobody really has been quite so forthright amongst the ownership of the Premier League clubs. There's been a lot of commentary from, you know, even lawyers saying, although it's great news for the lawyers, this whole regulation thing, even some of the lawyers have been saying, we don't want the games settled in the courtroom, we want them settled on the pitch. So I think... I mean, he's basically saying, you know, I think he's saying that it can't be so complex. We can't have all these legal cases. We can't have weeks and weeks of arbitration. There was a time during the season when we thought we wouldn't know which clubs were being relegated because of all the indecision.
I mean, has it resonated with other club owners?
Yeah, I mean, I think a lot of people feel the same way, but they also accept. Which I'm sure Jim accepts as well, that there is a need for regulation. I mean, what the Premier League is not doing this for fun. You know, they've got the richest league in the world, but only 4 clubs made an operating profit last season. Yeah. That's 80% of clubs made big losses. And the American owners in particular, they want to move towards a situation where clubs are actually profitable, because then otherwise they won't invest.
But so what happens next, David? You know, we had the European Super League, and that got shot down very quickly, especially by the fans. You know, if you're left with this one of the big clubs, and it was interesting, like, you know, Sir Jim Ratcliffe was talking about wanting to be more like Real Madrid, but how do you make money? How do you become, like, how do you get your money's worth?
Well, I think the direction of travel that the Premier League is going down is the one that they will follow, and maybe we'll have a simpler system. I mean, you know, these rules haven't been tested until this season, the PSL ones, and they've turned out to be very, very complicated. So maybe they need to kind of try and simplify things. But I don't think the solution, even for Sir Jim, is to get rid of the rules altogether.
Yeah, what happens with Nice?
Nice is fascinating. I mean, he's clearly not happy with the situation there. But in fact, I think he's got a result. I mean, under UEFA rules, Nice should not be allowed to play in the same competition as Manchester United. They've given him an olive branch. They've said, keep your distance, so don't buy the players, and you'll be okay.
David, thanks so much. It was really fun working together on this interview. David Hillier there, Bloomberg Sports. Now, coming up, Rishi Sunak welcomes UK inflation's return to target, but with his Tory party facing a crushing defeat at the polls, he may need more than better data for a turnaround. We'll discuss that next, and this is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
The Prime Minister Rishi Sunak's move 4 weeks ago to call an election has all but ruled out a UK rate cut today. Now, Sunak has hailed the news that inflation has returned to the Bank of England's 2% target. But with his Conservative Party facing an election wipeout, polls suggest it may have come too late to save the Prime Minister. Well, plenty to discuss with Bloomberg's John Stepik, who joins us. John, I want to talk about inflation. I just want to talk about the manifestos in general. I mean, given where we are in the polls, is there anything economically that the Tories can rely on to not lose as badly?
I mean, the economy's getting better. But I feel that we're at the point where this isn't, it's become a cliche to say that, it's the economy stupid after, back in the 1990s. And I think that possibly worked then. But I think that now, I honestly think the GDP figures could, rocket tomorrow. We could have inflation kind of collapse into deflation. I don't honestly think it would make a difference for the Tories at this point. Nobody is giving them credit for inflation coming down. Quite rightly, not giving them credit because it's not, it's not them that's done it.
Yeah. What has done it? Partly...
It's just literally base effects. It's kind of arithmetic. So, last year prices went up an awful lot. This year they're not going up by as much, and that's basically because it's all about the pandemic, and also about the amount of money that was pushed into the economy at that point. And it's just all of those effects coming out now. And I think what will be interesting is to see what happens to inflation going forward. Yeah. And the good thing is that hopefully what the pandemic, one beneficial side effect of that jump start was that we maybe left the deflationary world of the 2010s and we're back to something approaching normal now. Yeah. But that in turn also means that, mortgage rates aren't going to fall significantly. The Bank of England rate isn't likely to fall by an awful lot. Maybe the end point for this cycle is maybe 4%, 3.5% at worst. Yeah. And that, that's good, but it also means that we're not going to return to the post-2008 world that people got used to.
But John, so we could see when do you expect? The Bank of England could cut, I guess, in August, but then it's unclear whether it's one cut and done. Given all the dynamics that are not, it's not like inflation's falling off a cliff, frankly.
No, and it's likely to be kind of flat to slightly rising by the end of this year.
Right.
So, I think markets are probably about right in pricing in 1 or 2 cuts this year. And at the end of the day, it doesn't matter if the cut comes today or in August or September. Yeah. It's not going to, change things very much. And it probably won't come today because obviously that would be seen as somewhat political.
John, is there, so this is maybe a less political question, but is there a policy that would make a big difference to this country for growth, right? I mean, it's at the end of the day, it's you need to grow the UK.
Yeah, I mean, I think growth is the issue, and I think that all the parties have kind of realised that. And I think one of the interesting things about Labour and where they have put some clear blue water between themselves and the Tories is the idea they're going to push ahead with building and kind of move over objections to that. And I think it's a start. I mean, personally speaking, I think getting rid of as many regulations as possible within reason would also be a good thing, but I don't see any party doing that.
Okay, John, thank you so much. John Stepbick there. Be sure to subscribe to John's daily newsletter. It's brilliant, Money Distilled. On Monday, UK Business Secretary Kemi Badenoch and the Shadow Business Secretary Jonathan Reynolds go head-to-head in a live televised debate moderated by Bloomberg that will also face questions from Britain's leading business groups. Catch the business debate 12:30 p.m. UK time on Bloomberg TV, the Terminal website, YouTube, and radio.
Recently, I believe, is that you're going to do something called the Steve Jobs Archive. And what is that designed to do?
We are trying to honor and elevate individuals through the inspiration of Steve and his life. But I think much more importantly, we are trying to find the best way to communicate to others his ethos and his sense of enormous human possibility so that people can encounter the archive and feel inspired to do something even greater in their own lives or to stretch what they think is a boundary or something that they didn't contemplate for themselves. So we are still in the collection and development mode. We're building out programs. I think you'll see in the future, you'll see some scholarships and fellowships. You may see some publications, but it's much more about forward-looking and inspiring people to think about how they can be part of positive movement.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Or other authorities.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and
beyond. I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Good morning from our global headquarters in New York. I'm Manus Cranny. You're welcome to Bloomberg Brief. Let's set your agenda. A slew of rate decisions, a bonanza. Long on rhetoric, but only one delivers action. The Swiss National Bank cuts interest rates again as we count down to the Bank of England. In China, the PBOC loosens its grip on the yuan, setting the rate at the weakest since November. And is the golden age for private credit about to fade? We'll sit down with David Golub of Golub Capital. A very good morning to you. So the Swiss come out with a little bit of a shocker for the market. More on that in just a moment. It looks as if you're about to open up for the 8th day in a row on a winning streak on the NASDAQ. The 31 records in a row for the S&P 500. But it is down to this spectacular elixir of life that is NVIDIA. It is up by over 4% this morning at one juncture. There's the SPOOs up 0.4% at the moment. NVIDIA up, adding $170 billion in valuation immediately this morning. Likewise with Dell up 3.5%. Let's have a look at the prices of those. NVIDIA up 3.5%. You're looking at 10-year government bond yields here. Again, what you have is a whisker away from wiping out all of the losses for 2024. Euro Swiss, as I say, on the currencies, it's the Swiss. This is the euro up, the Swiss falling. Again, prepared to intervene. That is the message from the Swiss National Bank as they cut rates for the second concurrent time, down 25 basis points. Let's get to Alessandro Speciale. He joins me now on the decision from the Swiss to cut rates. This could be seen as much of a political move as it is of a monetary policy move in terms of pushing back against the flow of money into Switzerland from the euro crisis, euro political disruption. There we go, not crisis.
Yes, absolutely. First of all, we know that the SNB likes to surprise. This decision was a bit of a toss-up, so not a complete surprise, but the SNB was the first major central bank to cut rates, and now it's the first one to do so again. And of course, this compares with the Fed that still hasn't moved, and the ECB's reluctance to continue after the first rate cut. And the main reason is that the franc had been appreciating because the instability in Europe, the snap election in France, the result of with the far right winning in the European election has, or again, moved flows into Switzerland as they seek for a safe haven.
Indeed. Well, certainly it's moving Euro Swiss as we speak at the moment. Actually, ironically, all ironies aside, it moved more against the dollar in the first instance. Alessandro, thank you very much. Alessandro Speciale there on the SNB's swift move to cut rates. So we've had two hot inflation prints and a looming election. The Bank of England will almost certainly hold rates unchanged, with the focus turning to the odds of an August cut. Lizzie Burden is with us now. So, Lizzie, obviously the services inflation is not setting the table for a rate cut, but politics, again, will muddy the waters in the UK. Why will today be a non-event in theory?
Well, Manus, because of the election primarily, you've had officials on silent mode ever since Rishi Sunak called the vote, because they don't want to be seen cutting rates for the first time during the campaign. Optically, it would look like the old lady of Threadneedle Street was giving the government a hand. But look, there's still much for markets to mind, even though we don't have a press conference or a forecast or potentially even a rate move. Look at the guidance. Does it suggest that August is a live meeting? Are they comfortable with service inflation, as you say, coming in unexpectedly hot? And also look at the vote split. It was 7-2 last time. Does it become more dovish? But Manus, I would also just say, even if they keep rates on hold, that in itself is notable. When you've got inflation at the headline level, at least, back at the 2% target, and rates still at 5.25%. And if they don't cut this summer, they could miss the chance to do it if inflation goes back up towards the end of the year.
Well, that is the theory, isn't it, from our next guest as well. Lizzie, thank you very much that they're running out of time to deliver these cuts. Have a great day in the sunshine. It doesn't last long in the UK. That is Lizzie Burden outside the Bank of England. James Athey is a portfolio manager for fixed income at Marlborough Investment Management. James, good to have you back with us. Here we are. Volatility in Swiss assets is the highest since they removed the cap in 2015. How much of this, in your mind, is a political hedge? Because Jordan does warn those people that want to take a punt on the Swiss that the central bank will fight back if they need to.
Yeah, morning, Manus. I'm very jealous of Lizzie out there in the sun while I'm stuck here in my little dungeon. As you said, we don't get much sun. It's good to be out when we do see it. The decision today from the S&B to me doesn't look quite as focused on Swiss franc appreciation as potentially it has done in the past. If you look at the specifics of what they've said today, really, it does seem to be about underlying inflation pressures. And so a more sort of traditional, if you like, easing of policy. That's understandable. You've got headline and core both well below 2%. But obviously the Swiss franc and its appreciation and the role that plays in the economy and in the inflation process is a perennial problem for the SNB. Of course, they've even attempted to deal with that with what turned out to be a fairly catastrophic floor policy for Euro Swiss. So I don't doubt that in the minds of those decision makers, there is ongoing concern about, persistent, shall we say, appreciation of the Swiss franc, and that being both deflationary and a sort of a hold, if you like, on the Swiss economy.
Just to square away the idea on flow, I mean, the Swiss are going to have a battle royal on their hands. They've got a UK election, they've got a US election, they've got disruptive elections which have not gone according to plan in the first 6 months of the year. How much of a headwind is political disruption to the flow into the Swiss?
Wow. I mean, yes, it's when you have a safe haven currency and we enter a period of instability, I think it's reasonable and rational to expect that you're going to see some flight to quality flow.
Yeah.
Quite how disruptive these electoral events all turn out to be is obviously a question, but certainly I think the one most proximate to Switzerland, which is to say, the French election is the one which we all have most concerns about. I think it's very difficult to see a quote-unquote good outcome. It certainly looks difficult to see a stable outcome, and there is a potential for some quite extreme elements of both left and right within the sort of ruling parties. So if that does end up being very destabilizing for European assets, then yes, I absolutely would expect to see flows into the franc.
Now, as you've just said, France is one of your more serious concerns. If you look at the French-German spread, we're at 80 basis points this morning, 79 basis points in change at the close of business on Tuesday. So we extrapolated it back to a crisis that we both lived through on a day-by-day basis. It was the European debt crisis going back to 2012. How serious a concern is this explosion higher in this spread, James, or is this actually a phenomenal opportunity to step into French assets when all the world is running in the opposite direction? How do you look at the spread? Contrarian?
Definitely the former rather than the latter, Manus. Yeah, at 80 basis points, you're getting more compensation. But if you actually look at the fundamentals, France is in a pretty nasty situation, to be honest. It really has the economy and the dynamics of a peripheral country, but it has the obligations and the appearance of a core country, and that's not necessarily a particularly good combo. The deficit is large and has been widening recently. Unemployment has been rising a little bit, and from a structurally high base, France has structurally high unemployment and an inflexible labour market. And now we've heard obviously from the EU just in the last day or two that the excess deficit procedures are back on the horizon, and that requires a fairly significant belt tightening, which is obviously going to be a significant economic headwind. Meanwhile, the ECB obviously has to set monetary policy for the region at large. That's not a particularly great combo, and the parties who are contesting the election from left and right essentially all have policies economically which look from the left of the spectrum, which is to say, broadly speaking, ones which were going to expand the deficit as opposed to contract it. So there's an increase in risk premium in French assets, and that's correct. To us, that does not yet look asymmetrically attractive ahead of the political event.
Okay, I couldn't squeeze you for a trigger point of where it becomes asymmetrically attractive because I'm rushing out of time, so I'm pushing through like a bulldozer this morning. Give us your crunch point.
I mean, it's got to be at least 100 basis points, I think.
We'll take that from you. Now, I want to get to duration more broadly. Obviously, we'll hear from the ECB a little bit later on. The Swiss have just cut rates. Maybe August is live, but the Fed, if you listen to the voting members of the Fed, and I think that's critically important, from Barkin, etc., it is going to be extend and pretend, one and done, if you're lucky. You like duration. I'm curious to know, adding duration, reducing credit risk, spreads are too tight given the adequate compensation or significant potential for excess capital appreciation. So if you like duration, I mean, Do you like more British duration than you do US duration, given the context and the divergence between central banks that we assume?
Yeah, I mean, but we like ultimately we like both. We're overweight US and UK duration. There are some similarities in terms of the central bank communication, the inflation problems they're dealing with being largely that sort of more domestically generated services inflation, which responds more to labour market conditions and wages. But it's important to understand the sort of chronology of that process. Inflation is going to be the last thing to come down in that sphere. We are already seeing softening of the labour market. That's a bit less easy to be confident about in the US, but we would raise significant concerns actually about the veracity of the data. And to be honest, the fact that Jay Powell actually noted that at the last FOMC meeting, I think was pretty significant. So labour markets will soften, they're normalising, they will weaken. Ultimately, that will bring wage growth down, and ultimately that will allow services inflation to normalise, and that will allow central banks to ease policy. The timing is very difficult, but the risks are increasingly in favour of owning 10-year yields at 4 to 4.5%, because we strongly believe that economies are not going to grow above potential with policy where it is currently.
Okay, nicely put. We're out of time, but good to have you back on the show. And back in the saddle there, giving you calls. James Arthur there of Marlborough Investment Management. I guess this morning on the bond markets. Other stories trending on your Bloomberg terminal this Thursday morning. Families of the victims of 2 fatal 737 MAX crashes are asking the US Justice Department to fine Boeing nearly $25 billion. They say the company committed the deadliest corporate crime in US history. Dell CEO Michael Dell said in a post on X that the company was building an AI factory with artificial intelligence, heavyweights NVIDIA, that would power the next version of xAI's chatbot Grok. Coming up in the hour, we speak to David Golub, president of Golub Capital, on whether the golden age of private credit could be fading. Context matters on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Brief. I'm Menace Cranny in New York. A very good morning to you. So the plans for what could be the biggest shift in how China conducts monetary policy are starting to surface. Jill DeCease joins me now to break it down. So Jill, this is all about potential bond trading from the PBOC in the secondary market. What exactly do we know, and how could it impact the flow of money and policy?
Yeah, Manus, so essentially what's happening here is this is something that was initially hinted at in a document containing a Xi Jinping speech published all the way back in March. Now we're actually hearing it from the PBOC governor himself. It's kind of a two-pronged thing here. So as you just mentioned, this idea of both buying and selling in the secondary, these government bonds in the secondary market, maybe getting the market more involved with the interest rate process. The other part of it too is that Peng Gongsheng, the PBOC governor, he also hinted that maybe they'd be trending more toward utilizing just one short-term interest rate. I think, Manus, there's still a lot of big questions that are unanswered here about how exactly China is driving a lot of economic policy through the central bank. I mean, I'm not sure that this necessarily solves, for example, for the issue that does sort of focusing on credit when home buyers and companies don't necessarily want to take on more debt, ultimately solve some of these issues. But still, it does kind of indicate that the PBOC, the People's Bank of China, is willing to dip deeper into its monetary toolbox to try to affect policy, again, try to change some things up here. I think it also, Manus, calls into question the value, long-term for certain rates that they're already using, such as the medium-term lending facility rate. That's that key policy interest rate that they haven't really touched in about 10 months, even though they've lowered borrowing costs in other respects. So I think a lot to keep an eye on here, just looking at how China is actually implementing these policies and what it'll ultimately mean going forward for the central bank and for the rest of the Chinese economy.
Okay, Jill, thank you very much. And we're just showing the offshore yuan there. Obviously, a weakening setting by the PBOC, allowing it to drift higher by 33 ticks. So certainly they are conscious of the strength of that dollar, having held some of the rates steady by the banks last week. To geopolitics now. The U.S. State Department has called out China's escalatory actions in the South China Sea. The move follows the Philippine military releasing videos of what it described as China's brutal assault in disputed waters. Bloomberg opinion columnist Mark Champion joins me now. Mark, the tensions, are they threatening to expand further?
Yes, essentially. I mean, this is a trend that we've seen over a number of years in which China's Coast Guard has interfered with, used water cannon, rammed ships from the Philippines and other nations that have conflicting claims to islands in the South China Sea. The real thing to kind of keep in mind is that over the years, the Chinese Coast Guard and Navy have been expanding at an incredible pace. Whereas, for example, the Philippines has and the entire Navy is about 100 ships, and their job is to patrol about 7,000 islands, and they simply can't really keep up. And so this was an instance of a supply ship going to resupply a ship that was deliberately grounded by the Filipinos on an island that they wanted to make sure stayed in their possession. And so, there's a monthly resupply to that ship, which is essentially like an extra piece of the island at this point. And the Chinese were basically saying, you have no right to be taking weapons or anything else to this island. It's ours. And the Filipinos obviously claim and have had their claim, supported in international courts that it's theirs.
And elsewhere in Asia, of course, we've got Vladimir Putin. The imagery was very, very potent. Vladimir Putin signaling mutual defense pact with Kim Jong-un. And this is after he visited North Korea. There was a great deal of sort of social media fanfare about the two of them driving in a car that was gifted from Putin, again, to Kim Jong-un. But this pact, this agreement, comes at a very tense period of time, doesn't it, in terms of East-West relations?
It does. And again, this actually is really a big deal. I mean, especially a big deal for North Korea, which has been isolated in all kinds of ways over decades. And Russia, used to be part of an international consensus that was keeping pressure, sanctions, etc., on North Korea in order to prevent it from becoming a nuclear power. It clearly no longer is. And this is a door that opens for North Korea, in all kinds of ways to secure technology, military technology, and so on. And from the Russian point of view, a massive boost to their campaign in Ukraine, because the North Koreans have a huge, stockpile of artillery shells, etc.
Okay, Mark, thank you very much. Two very contentious issues arising on the geopolitical front. Mark Champion there from Bloomberg Opinion. Let's turn to some stocks that we're keeping an eye on. I mentioned NVIDIA. It's almost, we may as well put it on the board as a daily check, but there it is, up 3.44%. We were up 4% and change at one juncture. And of course, Supermicro all rallying pre-market. And this is it. Dell CEO Michael Dell said on a post on X that the company was building an AI factory with NVIDIA that would power the next generation of XAI's chatbot Grok. So let's get to Subrat Patnaik. He's got the details on this. I mean, we saw Jensen Huang on a roundtable recently talking about the co-joining of forces in tech. But just talk me through what this arrangement it is and who benefits.
So it's from the top down. Everybody's going to be using NVIDIA chips. But for NVIDIA chips to be used, you need to build servers, and companies like Dell, HP, Supermicro are all in line to kind of get contracts. And on a very cryptic and very typically Elon Musk post, Musk just said that half the things for his startup were going to be built by Dell, but the other half he suggested with just a single word saying SMC. So that could stand for SMIC, and we've seen shares in pre-market trading just go up on that. So we have Dell, SMCI, and NVIDIA rising more than 3% in US pre-market trading today.
Okay, well, they're certainly infusing a spirited upside to the opening potentially here in the United States of America. Subrat Patnaik on the tech story. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Get you your front pages now from around the world. Headlines, this is what we've got for you. Never far from your mind. The journal's gone with NVIDIA. The ascent of the most valuable company has the echoes of a dot-com boom. And that came with a tragedy at the end. The chipmaker passes Microsoft for the top spot, just as Cisco Systems did 2 decades ago. Cisco's then CEO, John Chambers, says this time it's different. Next up, Washington Post writes that once a Trump rival, Marco Rubio's shift puts him into the mix for VP. Rubio's position as a finalist to be Trump's running mate is the culmination of a years-long shift that has stunned and disappointed some of the senator's former associates. I'll leave you with a thought from the UK and the FT. Sunak claims credit for inflation hitting the target of the Bank of England. First time in 3 years that we've seen that. The Labour Party, who's hoping to govern, say prices are still too high, and the UK CPI is expected to rise again later in the year. And we saw that services inflation come in certainly higher than was estimated. Now, private credit's something that we normally do together, Danny and myself. This time we're going to sit down one-to-one. David Gullo, president of Gullo Capital, and we're going to ask whether that golden age of private credit is facing a headwind.
Names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable. Not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
That was going to keep bringing the World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond. From our global headquarters in New York, I'm Manish Cranny. It's Bloomberg Brief. Let's set your agenda. Rate decisions bonanza, long on rhetoric, but only one delivers action. The Swiss National Bank cuts interest rates again as we count down to the Bank of England. In China, the PBOC loosens its grip on the yuan, setting the rate at its weakest since November. And is the golden age for private credit about to fade? We asked that question to David Gullo of Gullo Capital in just a moment. Checking in on the markets. Welcome back.
if you've had a day out for Juneteenth, this is what we got for you. The NASDAQ, if it opens here on the cash, you could be in for your 8th day of a winning streak on that. NVIDIA powering ahead. It was up 4% at one juncture. Again, an announcement from Michael Dell talking about a real build-out along with NVIDIA powering both the stocks this morning. Both NVIDIA and Dell are furiously higher. It is the elixir of life to momentum. Rosenblatt, by the way, raises its price target to $200 on NVIDIA from $140. You're seeing TSMC make $1 trillion in terms of market cap as well. Other news flow on 10-year government bonds. We've almost wiped out all the losses this year for bonds. We're backing up a little bit, up 2 basis points. We've clawed our way back from more than a 3% loss on the bond markets. And Euro Swiss, of course, the Swiss down, the Euro up by 0.4%, as the Swiss National Bank cuts rates by 25 basis points. That was slightly unexpected, but they are prepared to intervene in currency markets if it all gets a little bit too much. 1.25%. James Athey with me saying it was more a monetary policy decision rather than something to do, in other words, an economic decision rather than pushing back against the geopolitical angst emanating from France and a flow of money into the Swiss franc. So it's just been a few short weeks since the industry leaders and Danny Berger gathered in Berlin for the private credit seminar Super Return. The question on everybody's mind is whether the golden age is about to fade. Joining me now is David Golub, president of Golub Capital. David, not an easy one to answer, but if we look at private credit funds, I mean, they're struggling to return cash to their investors. The banks are biting back. This frenzy in private credit is about to hit a wall.
So great to be here. Thanks for asking me. I don't think there's either a bubble here or a golden age. I think both have kind of been overstated. We've been in this business for 20 years. The way we look at it is it's just a good business. And we focus on making sure, as in any good business, that we have competitive advantages, that we have differentiation from how others in the industry are playing, and that we consistently do the same things and in the process produce consistent returns for our investors. So that's what we've been doing. That's what we continue to do. I think there's a lot of hype that maybe is overdrawn right now.
Why does Jamie Dimon say then there could be hell to pay in your business?
I listen to Jamie. You're probably better off asking Jamie about that. He also said there are a lot of brilliant people in this business. So I think Jamie is wrestling with an industry that is been competing aggressively with what banks used to do, and he's doing what he should be doing. He's talking his book.
Grand, and you're here to talk yours as well, but I'm curious to get your take. The narrative that's put forward is that the banks are throwing quite a large quantum of capital back at private credit. They lost ground to you. You've had a halcyon sort of 5-6 years here. How much are the banks really snapping at your heels and really eating into your territory again?
So our main business at Golub Capital is focusing on lending money to middle market companies that are backed by private equity firms. And the truth is that banks have not been in our business in a meaningful way for many, many years. The trend away from banks started in the early 1990s. It accelerated after the financial crisis. Where there's a bit of competition between the private credit industry and the banking industry is in providing financing to larger companies, companies that generate, say, $100 million or more of EBITDA. And that's a small part of our business, to be honest, Manus. It's an area where I think there's some healthy competition between banks and the private credit world. There are some private credit players who concentrate only on that large market niche. That's not us. So I'm not really too worried about competition from banks. They're not a major force in what we do on a day-to-day basis.
I was just looking at the skew of where your business is: industrials, health, and tech, and yet your smallest, if I'm not incorrect, your smallest exposure is to the consumer in terms of rankings. Is that a very deliberate skew, or is that just where our center of excellence lies, Manus, as opposed to some nuanced concern about a slowdown?
No, it's a great question. So we focus and have for our whole history focused on resilient businesses in resilient industries. So if you think about that from the context of portfolio selection, there are naturally going to be some industries that we concentrate in and some that we avoid. We tend to avoid very capital-intensive or cyclical businesses. We tend to avoid faddish or fashion-oriented businesses. So a lot of consumer businesses have characteristics that make them less resilient.
Yeah.
So we tend to be more picky about those businesses and tend to prefer businesses like mission-critical business-to-business software or like especially distribution, where demand is very consistent, customers are repeat customers, revenues are very predictable.
We are trying to understand what's going on under the hood. I know you say, look, Manus, there's a lot of hype and there's a lot of headlines, but if I look at the one thing that Danny and I have discussed many times here is the lack of exits from private equity. That puts pressure on them for a lack of liquidity. And so they get creative with the NAV loans, the NAV loans. When you look at that momentum in the market, that push towards NAV loans, those are newer debt structures. They perhaps come with less transparency. Is there anything that concerns you about the growth in that area?
I actually think the growth is slowing down in the area of NAV loans. It's been, to your point, something that's gained momentum during a period when, in many cases, private equity firms were loath to sell their companies because they weren't confident they could get the values they want. We see that changing. Right now, we've seen some growing momentum in middle market M&A. Feels to me like that momentum is growing right now. The gap that we've seen over the course of the last 2 years between what sellers want to sell their companies for and what buyers want to pay, I think that gap has narrowed very significantly.
And this sort of then takes us to the next point, which is what does your business evolve into? If we look at the defaults that have come through, for example, like Oaktree ends up owning a football team. Are you ready to? Well, that wasn't what they stepped into that particular deal for. Are you ready to own assets? Are you engaging with restructuring teams, or is Manus, that's just not the road for me? I'll do anything but own assets.
So, as I said, we've been in this business for more than 20 years. Sometimes, when you're a lender, things don't go well, and in my judgment, you need to be prepared to be able to step in and be a company owner from time to time.
Are you ready to do that? Would you be willing to do that?
Absolutely. We have been. We do that today. We have for our full history. We don't lend money to soccer teams, so I don't anticipate owning a soccer team. I don't envy the owners of soccer teams. That sounds like a very hard business to manage, but yeah, we make loans to companies that if things go wrong, we're prepared to own.
So you've no FOMO about being in sport, no?
Not for me, not for me.
Let me just finish off with this in terms of fundraising. Very briefly, I want to get your feel for this. Your approach to fundraising in the Middle East, is it getting harder? Is it getting tougher? They're a savvy bunch. I know them well. So give me your take.
I think investors around the world are getting much savvier about alternative investments. And I think increasingly, investors globally are looking at managers like us and saying, what's your special sauce? What do you do that makes you different from other folks? Why should I trust you to be able to continue to get high returns, premium returns? So I think investors in the Middle East in particular, it's an area where the increase in sophistication has been particularly marked.
Okay, David, time has run against us, but we hear you loud and clear. You're not in the market for a football team. Jim Ratcliffe might be in the background there somewhere. David, thank you very much for joining us for your view on the markets in private credit. That is David Golub there of Golub Capital. Interesting take. Not frightened to own assets if that's what it takes, but he's not in the market for a football team. We'll keep you appraised of the situation this Thursday morning. What a beautiful, beautiful day. It's going to be hot, hot, hot in the city of New York. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
It is Bloomberg Brief. I'm Menace Craney in New York. So we have a bit of action from the SNB, and we're counting down to the Bank of England. Of course, they are stymied somewhat by the politics of the UK. Inflation coming back to target at the headline of 2% for the first time in a number of years. The Prime Minister taking the crown on that one. But services inflation is still a little bit hot and a little bit sticky. Marcus Ashworth is with me, our Bloomberg opinion columnist. So it's amazing how the politicians run in and grab a year-on-year change. But of course, inflation is still sticky in the UK. How sticky is it, and how hard does it make the Bank of England's job to really cut after the election? Marcus, good morning.
Good morning. Look, I felt slightly sorry for Rishi Sunak because, yes, none of us believe that the government's attempts at inflation reduction are that important. They are in some sense. He could have spent a lot more and made it worse. I think his own minimum wage rise actually has caused more problems than he perhaps would have appreciated, and said the Bank of England are following that through in wage rises, and that their best measure at the moment of that is services inflation, which, as you alluded to, only dropped to 5.7 from 5.9. Now, this is very slow to go up and very slow to come down. And the Bank of England, Governor Bailey particularly, has mentioned that they're not going to take these things too seriously. Although this is a 0.45, actually, 0.45 increase above where they expected it to be. So you could argue that's why they may have decided anyway to pass today. The fact they're in Purdah, ever since the election has been called, makes it almost certain that they won't do anything, because it would be very difficult to explain a interest rate cut, the first one, with no press conference and no real commentary afterwards, because they're not really allowed to. There will be a little bit of comments, I think, from Bailey, but on a very controlled basis. So it would go into a markets communication vacuum, and I think that wouldn't be very clever for stability purposes. So let alone whether or not the inflation's a little bit sticky. Look, personally, I think at 2%, that's a clear evidence that inflation has gone up and come back, passed out through the system. A bit like we saw the SNB earlier, they are obviously worrying about where the Swiss franc is to the euro, but at the same point, they're seeing inflation dropping away quite fast. So I think a lot of these central banks ought to be focusing really on looking through a lot of this stuff. The Bank of England wants to, and I think they probably will cut on August the 1st, but you can see why a little bit extra time just to see if service inflation comes down below, it's closer to 5%. I think if we see that in the June data, which probably will be the trough, then maybe we'll get a rate cut, but not until.
Yeah, we're pricing what, 30% probability of an August cut, down from 45%, and that was before the inflation data. Of course, we have a general election to come, and it could well be a Labour landslide. Who knows what that's going to do in terms of market and asset pricing. Marcus, counting down to that election, Marcus Ashworth, our Bloomberg opinion columnist. Now, some stocks that are top of our mind this morning, never far from the agenda, is NVIDIA. But today it's NVIDIA, Dell, and Supermicro, all rallying pre-market. You're looking at NVIDIA at one juncture putting on $170 billion worth in value. It's faded back a little bit. And this is all on the back of the Dell CEO, Michael Dell, writing on a post on X that it's about to build an AI factory with NVIDIA that would power the next version of xAI's chatbot Grok. So it is a trifecta of power. Matt Bloxham is with me. Matt, I mean, how significant is this news about the creation of the new AI factory for Elon Musk's Grok chatbot?
Yeah, I mean, I think for Dell in isolation, not huge, but I think it's a real kind of big milestone for what's to come over the next 12 months or so, with Elon Musk investing aggressively into that Grok AI platform to become a rival to OpenAI. So I think there's going to be an interesting dynamic as we move into 2025 to see all these kind of big tech titans challenging each other for kind of dominance of how the world's going to be over the next decade or more. So a kind of relatively small step financially at this point, but significant for Dell in terms of a big deployment of their new AI factory platform and feeding into this growing rivalry between the big tech players on AI.
And then, obviously talking about NVIDIA, the stock this morning at one juncture was 170 billion in terms of market cap add. I mean, it's trumped Microsoft. It's taken the lead. It's jumped over everybody else. You've also got Taiwan Semiconductors making $1 trillion in valuation. I mean, look, we can talk about momentum and parabolic moves. I don't know where I am with this. It feels like a real slow, everyday momentum higher. But if you look at it and stand back and you go, wow, it is pretty meteoric.
Yeah, it is. And, I think it's a little bit surprising to kind of see this next leg up. But, I mean, I've just come back from the Cannes Lions advertising festival where AI is just on the tip of everybody's tongue. It's in every presentation. Elon Musk's been there too. So I think we're still in that phase where people are starting to realize just how pervasive AI is going to be across the kind of every aspect of our life and in every industry. And I think these big players like NVIDIA and TSMC are still very much in incredibly strong positions to take advantage of the opportunity. They've almost kind of got such a big moat now that it's hard to see how others can come in to kind of really challenge their leading positions in the marketplace.
Okay, man. Well, certainly it's adding fuel and the elixir of life to the momentum in these equity markets. If we open up this morning, it looks like the NASDAQ would be on for its 8th day in a row of a winning streak. So the momentum is there. Matt, thank you very much. Matt Bloxham, all about the moats around NVIDIA. Now look at that skyline. It is hot out there. A brutal heat wave is hitting millions of people across not just New York, but the whole of the US and Canada. Several cities and states are taking precautions, keeping residents cool as temperatures soar for a 3rd consecutive day. Brian Sullivan is with me. Brian, this heat wave, I mean, it's all across the eastern seaboard. What is the impact?
It's been brutally hot just about everywhere. New York is kind of, they've kind of been at the edge of it with temperatures in the high 80s, sticky. But the heat is going to start rising in New York today. It's going to get into the 90s, and then down into Washington, D.C., it'll get up to about 100. There's a lot of demand on energy, but the rates seem to be holding pretty steady so far. But as those temperatures rise, we may see a little pressure over the weekend.
And in terms of preparation for this extreme heat, what kind of preparations, what kind of warnings are being sent out? Obviously, if you've got elderly neighbors, etc., maybe just knock the door and check on them. But from a state and city level, what kind of preparedness are we seeing?
They just send out warnings to people, stay out of the sun, don't work outside during the middle of the afternoon, those kind of things. They open up cooling shelters around various cities where they'll have air-conditioned spots where people can go if they can't afford to have air conditioning in their homes. things like that. But the biggest thing is, check on your neighbors, check on small children, check on pets even, because that's a big thing. And the elderly, of course, because they're the most vulnerable.
Okay. Don't forget the cats. Brian, thank you very much. Brian, I actually saw people just touching the ground. I was walking yesterday, touching the ground for the dogs paws. Reminds me of Dubai. Taking the dogs out in the heat, the ground actually is pretty hot. So that is certainly one to remember. Brian, we'll check in with you through the week. It's going to be hot in the city of New York and beyond. Crank up your aircon. Cranking up the heat in the FX market. The SNB cuts rates by 25 basis points. Again, this was a second in a row. Some people say it was sort of unexpected. But you are looking at the euro rising against the Swiss franc this morning, up by 0.4%. Is it a political pushback? The governor is prepared to intervene in currency markets if needed. As you can see, the euro against the Swedish krona there, and euro sterling virtually flat. The real move is in euro Swiss today. Coming up, we'll set the agenda for you trading day. We're counting down to the Bank of England. The decision is on deck. Good morning from a hot and beautiful New York.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Bloomberg Brief. I'm Menace Crenny in New York. This is how the rest of your trading day looks. We're kind of down to the Bank of England. The rate decision is at 7 a.m. Of course, the bank is in powder before this election, and we've dropped to around 30% probability of a cut. We've got data in the U.S. You've got jobless claims, and you have housing starts at 8:30 a.m. Again, the jobless claims will be closely watched. More Fed speak, Kashkari, Barkin, and Daly all throughout the day. The narrative on the central bank speak is very much about it's going to be towards the end of the year. We need to see more evidence. Your micro movers are pretty self-evident. We've been talking about them for the past hour. These are they. You have NVIDIA pacing ahead. Again, this is all on the announcement, or on the tweet, I should say, from Michael Dell last night about the coalescing of Dell and NVIDIA in terms of building a new superstructure, a new production factory. So both stocks are pacing ahead this morning, likewise with Supermicro. Markets for you in terms of the actual movers. Keep an eye on 10-year government bonds. I mean, we are a whisker away from undoing the losses in this market of 2024. So we've clawed our way back, all the way back. This is obviously the volatility in yield. As Barkin said, we're clearly on the backside of inflation. James Athey was with me this morning saying we feel very comfortable owning duration. This is one of the top calls. So the bond market very much in focus at 425. It's a pretty important psychological level on those markets. So we'll keep an eye on that. We're counting down. The big movement is, of course, in Swiss. It's a weakening in the Swiss, 25 basis points cut from them. And that is something that Thomas Jordan has made very, very clear, that they are prepared to push back on any sort of aggression in the FX market. We're counting down. The French have had a pretty sizable bond auction. What's interesting here is you're looking at a French-German bond spread, which is kissing 80. James Athey again with me this morning saying, look, it would need to get to around 100 before they would be prepared to do that. 10.5 billion euros worth of French government bonds are being sold for the first time since Macron called the snap election. Now, look, on average, they sell between 12 and 13 billion euros worth of bonds. Don't forget, they've got a budget shortfall of 5.5%. They're receiving verbal smacks in terms of their fiscal largesse. That spread has added 30 basis points in the past 10 days. It's a febrile market to come to ask for lending when politics are very much at their zenith of concern in France.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
What the market wants to see is that the economy is coming back into balance.
The economy is moderating, but very slowly, and I think that'll be music to the Fed's ears.
There is a risk that the economy actually worsens more because of the self-reflective interdependence between the Fed and financial markets.
Higher for longer earnings allows markets to stay here, even though we're going to get higher for longer rates.
There's going to be a real kind of push and pull in stocks, I think, over the next few months.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Are we there yet? This is Bloomberg Surveillance on Bloomberg Television for our audience worldwide. Anne-Marie Hordern, Danny Berger, myself, John Farrell will be off next week. Are we there yet? I am not talking about the end of the week, although you can interpret it however you like. I'm talking about this elusive rate-cutting cycle that ostensibly we're supposed to be kicking off, that's starting in Europe, and then kind of goes nowhere. I mean, there's a question, Danny, of how slow can we go as the Swiss National Bank tries to get it underway, and the Norwegian Central Bank says, I don't think so.
I was going to say the S&P would differ from the idea that we're not there yet. The strong dollar be damned. I mean, they are willing to cut, even though the Swissy is down by 0.6%. So the cutting cycle is only starting for those who have the chutzpah to have their currency weaken. And otherwise, everyone else needs to wait from the Fed. When will that take? We've had a lot of Fed speak. Bertrand Moussalem saying it could take quarters before he's confident that they have the data.
And they're not alone. I mean, the Norwegian Central Bank also talking about that. If John were here, he would say, why are you talking about the Norwegian Central Bank? Or even the Bank of England, which comes out in about an hour time. It is all about the Federal Reserve. There is this idea, though, Anne-Marie, that is sort of percolating under the surface, which is that political risk is making it a whole lot harder for some of these central banks to go at a time where deficits and fiscal spending are offsetting to such a great degree some of the monetary restriction.
And this is what Greg Vallier was talking about this morning. So we got those latest CBO reports that basically is sounding the alarm once again about the deficit is about $400 billion higher for this year than they were projecting in February. And he's saying that this is the biggest complaint he gets when he talks to clients because their concern is that deficits fuel inflation. And he said, can you imagine this year we have this uptick in this deficit, this uptick in this spending when we have great growth and no pandemic? What would it look like if we were in a downturn?
And this is the reason why people are concerned about the fiscal response to that. Although I have to say, Anne-Marie, people have been talking about this for quite a while. And suddenly the French issue that came up seems to really be bringing it more to the fore. And this is going to be one of the tensions that we see throughout the next couple of weeks. Have we kind of priced in too much political risk and we can go back to just saying it doesn't matter? And do we go into French assets, which a number of guests today are basically going to say? Or is it, wait a second, this is kind of a playbook for what could play out other places?
Well, you have the city view, which is basically like, for now, we are going to downgrade those assets we were looking at. But others are saying now's the time to get in because people think it's way overblown. And if we get a hung parliament, it's basically going to be status quo for a while. So a lot of people want to maybe wait on the seat. Some are waiting to see what the politics will dictate, but others are saying now's the time to buy.
I had a really interesting conversation yesterday with someone from Signum Global Advisors who basically said every leader wants to avoid a Liz Truss moment. They are keenly aware of you, Lisa, saying that it could be a Liz Truss moment. And because of that reason, they're actually likely to be more moderate. Le Pen is likely to be more moderate when she comes into office because she knows that a politician's career can be short-lived if the bond vigilantes come out for them.
Look what Liz Truss has done for, fiscal policy.
Her lasting
globally.
Legacy.
Okay, maybe. We'll see. TBD. There is this issue about whether any of this matters. At the end of the day, if a chip maker got to keep on chip making and NVIDIA can keep on creating record highs and just shooting to the moon, becoming the biggest stock, the biggest, most highly valued name in this nation. Danny, I don't want to say that I'm hearing more bubble talk because that seems sort of histrionic, but there are more people starting to question it a little bit more.
It's just uncomfortable when you've had an S&P rally for the past 4 weeks and the rest of the market, the majority of the market has been down. That's something that's only happened 4 times since 1990. I think just the data, the superlatives that are coming out make it very uncomfortable because all you need to do is look at a Cisco if you want a longer dated historical example of where that goes wrong, or even Intel. I mean, a chip maker whose AI plans are not panning out. If you get this a little bit wrong, the market will punish you.
You talk about it's uncomfortable. Barclays this morning, and Dan, I know you saw this notice, calling about it reluctant longs. it feels uncomfortable at some of these to be a little bit long.
And when you bring up Cisco, there was this Wall Street Journal story saying basically the last time that a big provider of computing infrastructure was the most valuable U.S. company was, you got it, March 2000, a pretty uncomfortable year. And that was the networking equipment company Cisco at the height of the dot-com bubble. State of play, are we headed for 32 in terms of record highs this year on the S&P, trying to get that bump up 0.4%, 5582. To think that people who called for 5,500 in the S&P were overly bullish, we are past that. They would be talking about declines by year end if their target for the S&P is 5,500. You're just weakening a touch, but really it's been in this range-bound place, 107.29. 10-year yields up marginally. We have seen a little bit of retracement from the record, the incredible rally that we saw last week, 425 on the 10-year, and crude up just marginally, with a real question here heading into the busiest travel July 4th ever, and what that means for crude heading into the driving season. Coming up, Jonathan Stubbs of Berenberg on why Europe is outperforming the U.S. Can it continue? Sheila Kayaglu of Jefferies on Boeing CEO Dave Calhoun's testimony, and Flexport founder and CEO Ryan Peterson on the latest disruptions in the Red Sea and possible logistics challenges coming up. We begin with our top story. Big tech, yet again, driving U.S. stocks to 2 days of gains. Jonathan Stubbs of Berenberg writing this: despite the recent dominance of U.S. mega-cap stocks, European equities have outperformed U.S. equities on a median basis so far this year. Jonathan joins us now. Jonathan, I want to start with this idea that despite some of the expectation that U.S. exceptionalism can continue, you and others are saying actually this dip is viable in Europe on the heels of some French turmoil. What gives you that confidence?
Yeah, I mean, firstly, on this of US versus Europe, I mean, US equities have outperformed Europe on a market cap weighted basis. But when you break down the large, mid and small cap indices on a median return basis, that Europe has outperformed the US significantly in large caps, mid caps and small caps. So what's driving that is the distortion that you've already been talking about this morning from NVIDIA and Mag 7, which is a distortion for US markets and global markets. The case for Europe still seems one where you don't have to have anything but modest expectations to get a reasonable return outcome in 12 months' time. So if you see a modest re-rating back towards long-run average PEs, if you see a modest improvement in the macro after a period of lengthy stagnation, and if you see a modest improvement in earnings growth to sort of single-digit earnings growth, you get a very reasonable 10 to 15% base case in 12 months' time. So I think that's the attraction in Europe, that the hurdle of expectation is so low. So you can go in with modest expectations and it adds up to a reasonable return outlook 12 months later.
Jonathan, there is this issue, though, of political risk. And I'm looking, for example, at spreads, the spread between French and German 10-year bonds. It's at its widest going back to November of 2012. That was at the height of the debt crisis. Real concerns. There was a French bond auction. Definitely there were concerns there. There is an overlying fear of some of the deficits that have been incurred post-pandemic and what that means for just how much more money and a fiscal response to any kind of weakness. Why does that not worry you?
It does worry me a lot. I mean, I start every meeting with investors in the US, in Europe, in other parts of the world with what we call our Brave New World regime. This is a regime we've been running for 2-3 years now. The primary pillar of that is what we see as disruption globally, embedded, extending, structural, and disruption from political and geopolitical risks. So that's at the center of everything we see in markets. From a European, from a French perspective, we've seen obviously a flare-up in local risk, which is also significant. From an equity market perspective, it's interesting to see, say, the French equity market now carries a median free cash flow yield of 7%. Now, in previous macro crises in the last 15 years, the financial crisis, the sovereign debt crisis, COVID, that free cash flow yield median peaked at 8%. So we're pretty much there. You look at the insurance sector, it carries a 6% dividend yield. That's also reflecting the previous macro crisis. So one of the points here is that there's a lot of bad news already priced in. So for the price action from here to be significantly negative, we need to see a new macro shock compared to what we have already in play in front of us. And we think that's unlikely to actually play out. So we see this as an opportunity. 12 months' time, we see a very reasonable case for French equities to, again, deliver double-digit returns. Would prefer Italy and Spain because they're cheaper and they have better macro momentum and arguably less political risk. But Europe, again, looks pretty well placed with low expectations and low hurdles to reasonable returns.
That's quite bullish on the French market. So is it your understanding then that you think politically there could be a hunk parliament? It's basically status quo?
Yeah, I mean, sometimes political paralysis, which is at this point a very likely outcome with Macron as president, but with very little control in the House. That paralysis historically, again, doesn't tend to sort of lead automatically to a negative macro outcome. So we think that sort of the damage that can be done economically from what will play out in front of us over the next few weeks in France politically is going to be quite limited and doesn't change the gradual improvement story that we expect. Again, modest recovery from 18 months, 2 years of stagnation in France and the rest of Europe. So politics carries risks for sure. We have to engage with it for sure. But I don't think it derails this modest improvement path, and that's all European equities need to actually give them a chance of delivering these reasonable returns for investors over the next 12 months. The US has much higher hurdles to performance given a 21 times multiple. The US looks very stretched, so your assumptions have to be so much stronger, and that we think is harder to achieve on a 12-month basis.
Jonathan, I was going to say, because I wanted to take the other side of this trade, because a lot of investors have said because of the political instability of Europe, they want to buy US, that it strengthens American exceptionalism. So are we too sanguine on American equity, and let's be honest, NVIDIA being a haven right now?
Well, what do we have as the pillars of our investments of toolkits? I mean, we have valuation, we have technicals, we have fundamentals. Valuation on most measures, whether it's NVIDIA on sort of 45 times forward earnings, whether it's the Mag 7 group, the technology group, the US market itself. We're not necessarily at peak bubble levels, but there's definitely sort of a whiff of bubble about it in terms of valuation. Technicals, very briefly, look at NASDAQ's RSI. It's above 80. It's the highest level it's been in over 5 years. It was at 30 in April. So we got this sort of trading technical buy signal in April before we've just had this ramp up. So perhaps we should respect the technicals here as well. And then we're not pricing much for risk. So I see it as this, pretty full valuation, technicals at risk, and we're not pricing risk into the market or into particular stocks. So I think this is a time where we like to get consolidation. We have to sort of try and protect what we have. And we would be looking to sort of run broader exposure and some protection strategies at this point. We've written a lot about that and sort of published that in our research.
Jonathan, just to put a bow on that, is NVIDIA a reason not to buy the US?
Is it a reason not to buy the US? Well, the incredible thing, I think incredible thing about the US equity market since 2007 is the US equity market has received $30 trillion of policy support via central bank balance sheet expansion and also expansion of government debt. You add those two together, $30 trillion. The US equity market has increased by $30 trillion, the same number. So the US has led the way over the last 15 years in providing combined policy support into the market, and is expected to do so over the next 5 years. The government debt in the US is running at $2.5 trillion up every year. So there's another $10 to $15 trillion effectively of support coming through that channel. I think it's hard to bet against the US longer term, but over the next 12 months, I can see why investors should look to have a more balanced portfolio between US and non-US equity markets. That's what we're seeing beneath the surface when you strip out the NVIDIA and the Mag 7 effect. That's already happening, but it's just distorted by the exceptional performance that we're seeing at the top end of the market cap scale in the US.
Jonathan Stubbs of Berenberg, thank you so much for being with us. Really provocative and interesting way to start the day. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Hackes. Yahaira.
Hi, Lisa. U.S. intelligence agencies say Chinese leaders have no clear preference between President Joe Biden or former President Donald Trump in the upcoming election, and say ties will continue to deteriorate no matter who wins. That's according to U.S. officials who asked not to be identified. Chinese officials think a second Trump administration could mean unpredictable policymaking and new anti-China measures, while Biden could look to strengthen partnerships to push back against Chinese influence in the region. The Swiss National Bank cutting interest rates at a second straight meeting as it battles low inflation and a strengthening franc. Officials in Zurich reducing the benchmark rate by 25 basis points. It now stands at 1.25%. The move highlighting divergence among major central banks, with the Federal Reserve paring back rate cut expectations and the European Central Bank showing reluctance to move again soon. And a record nearly 71 million Americans are expected to travel over the Independence Day holiday. According to AAA, about 60 million of those Americans are expected to drive 50 miles between June 29th and July 7th. That would be an increase of nearly 5% from a year ago. Meanwhile, nearly 6 million are expected to fly during that time, and that's up almost 7% from last year. That's your Bloomberg Brief. Lisa?
Thank you so much, Jairo. So basically, a lot of traffic and long TSA lines. Up next, Boeing's moment of reckoning.
Much has been said about Boeing's culture. Our culture is far from perfect, but we are taking action and we are making progress.
That's coming up next. This is Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back. This is Bloomberg Surveillance, trying to eke out a 32nd record high for 2024 as we look at futures poised upward about 0.4%. So I got to say, Danny, on Tuesday we got another record high, but it felt like it was a cheat. It was up about 0.25%. It was kind of limping across the line with NVIDIA just basically pulling everyone along with it. Does that count?
I don't know. It doesn't seem like a particularly bullish market. You know what I mean? It's like, okay, we kind of buy NVIDIA a little bit. I'm worried about the robots, Lisa, not taking our jobs, which I know we'll discuss that later in the show. But if this is a market that's just built on momentum strategies, is that a house of cards ready to fall if it's just the algo-driven computer traders who are fueling this rally ahead that are fickle and can mean revert quickly?
Maybe the bots know something we don't. Meanwhile, what you see certainly in the bond market, a little bit of a retracement after some of the yield declines that we saw last week as people reassess just how much and how quickly we're going to get down to a regular or a Fed target for inflation. Under surveillance this morning, Boeing's moment of reckoning.
Much has been said about Boeing's culture. We've heard those concerns loud and clear. Our culture is far from perfect, but we are taking action and we are making progress. We understand the gravity, and we're committed to moving forward with transparency and accountability.
Here's the latest. Families of the victims of 2 Boeing 737 MAX crashes asking the Justice Department to fine Boeing almost $25 billion, calling it the, quote, deadliest corporate crime in U.S. history. It comes after the company's CEO, Dave Calhoun, faced a grilling from U.S. senators over Boeing's safety culture. Sheila Kayaglu of Jefferies joining us now. Sheila, before we get into the Boeing issues, we just talked about how there's going to be a record amount of travel coming up at the July 4th weekend. Are you concerned about the safety of some of these planes that are older, that are being used, as all of these questions swirl on Capitol Hill, and we wonder about air traffic controllers being up to speed and some of the long-term scars of the pandemic era?
No, I'm not concerned. I think aircrafts are still safe. I'm more concerned about flying older aircraft longer. So I'm flying a 757 to Europe. You're not supposed to be flying those anymore to Europe. You're supposed to be flying new planes, and we're seeing delays, obviously, with the MAX and the 787 from Boeing now as well. So I'm not worried about safety overall. I'm just worried about aircraft staying in the fleet longer, and that's been our whole call, is play the aftermarket suppliers who are maintaining these planes, because they're the ones benefiting.
And it seems like that's going to be ongoing, especially as Dave Calhoun didn't really point to a road forward. There still is sort of a discovery process, however many months later, rather than say, hey, this is our plan for how we're going to really evolve out of this. Do you think it's feasible for this government to fine Boeing $25 billion, given the fact that this nation depends on this company and needs it to revive, and so can't punish it that harshly if it threatens its fiscal sustainability?
I think Boeing needs capital to survive to begin with, working capital to support its suppliers. It supports 170,000 employees. Each 787 has 2.5 million parts, so you have to support a whole supply chain. So to fine them $25 billion doesn't really make sense when you look at the prior fine of $2.5 billion. It really, it implies this fine could be about $1 billion, and obviously Alaska was a lot smaller than the last 2 incidents in that there was no fatal incident involved. So I think that, we can't fine Boeing because they're already in trouble themselves, and I think that's exasperated in the fact that they can't find a new CEO. It's been about 3 months since Dave Calhoun said he's stepping down, and we don't have any successor.
Sheila, what do you make of the CEO search? Where do you think they're going to look? Because it seems like the people they're trying to tap, according to Wall Street Journal reporting, are not interested in the job.
Yeah, 1-800-LARRY-CULP did not work this time around. And I think, there's a search firm out now, so it's official. We've brought it down to 2 candidates, Pat Shanahan and Stephanie Pope, who are both internally involved, and I think that's what we hear a lot of. Somebody internal or that's touched Boeing in some way needs to become involved because an outsider can't fix it right away. And then you have the next successor come in 3 years after this interim period.
When Dave Calhoun was talking to lawmakers, he was asked, have you spoken to these whistleblowers, which is why we know so much information of really the chaos that's happening in this company? And he said, no, but maybe it's a good idea. Do you think that as they deal with these crisis after crisis, as they deal with all these issues, that they are leaving no rock unturned? Because it feels like they almost are.
Yeah, I found the testimony very dispiriting. It was, it's a broken culture, and beating down on it won't help. I do see his point that he can't necessarily speak to every one of his employees, but I think that was an ongoing theme, that there needs to be some element of personal touch with the employee base, whether it's monthly meetings or meeting whistleblowers, one-off. We get that a lot at Jefferies. Our CEO hosts plenty of one-off lunches, one-off dinners, and I think that personal communication with employees really builds a great culture. So I'm not one to speak. I'm not the CEO of Boeing, but I do think some of the comments there were helpful, but also impossible when you have such a big employee base, a supplier base, and a customer base you're supporting.
Right. Well, that's one thing that Boeing can do to fix the culture, as you say, talk to your employees. But do you see a clear path forward when it's day after day of issue, of old parts, of something going amiss? Dave Calhoun doesn't seem to be really communicating what it is. Is there a clear way to fix this?
I think less bureaucracy as well. I don't know if what the Senate imposes, more paperwork, more processes will necessarily help. I think some of it could be that personalization element where people feel responsible or they're vested in the stock. If they have shares, we're going to see what happens with the union agreement. 20 to 30% of their employees are up for a contract renegotiation come September. So maybe the best way is to motivate people with funds forward and investing in their business. And that was one of the recurring themes. Post the pandemic, the labor force is much younger. And so to have them stay, to not have that rework element, maybe you incentivize them to stay a year, 3 years, 5 years.
But what degree is it too late that talent has just fled Boeing en masse, and rewarding current employees with stock options isn't enough because you don't have the people you once did. You don't have those people, those veterans who've been around to really address some of the issues.
I think the supply chain's still struggling. We're hearing that across the supply chain. But then I was down to see another aircraft manufacturer, General Dynamics, this week, and they haven't had a safety issue. They're certifying 3 aircraft. Same thing with Textron. So I do think it's not impossible to have the aerospace manufacturing supply chain work. Other companies seem to be doing it. Obviously, Boeing is at a 10x larger scale, but there are cultural incentives you could, put in place to fix this.
Just real quick before you go, I am curious about the travel season and whether it's going to get more miserable and kind of whether people are going to just stay home a little bit more. Are we seeing the turn in the cycle for flying a little bit as people kind of get fatigued by some of the lines if you don't have clear and TSA pre-approval or other things of that nature?
I think what's going to incentivize people, unfortunately for the airlines, is a lot of airlines are pouring lower pricing into the Latin American, Miami, Caribbean markets. And although capacity is up, pricing is down. And that's what we're watching for the U.S. carriers. Elliott put a $2 billion stake into Southwest. We have an underperform rating on Southwest. We don't think that's the right move because where they're structurally placed in the market is bad. So actually, I think people are going to keep traveling, especially with these low fares.
To the Caribbean and to South America, especially if they've got clear and TSA pre-approval. Thank you so much, Sheila Kayaglu of Jefferies. We really appreciate that. Coming up, Ryan Peterson, founder and CEO of Flexport. It's going to be a fascinating interview, to me anyway, just because we're talking about logistics and Anne-Marie, some of the ongoing tensions. We're still talking about Red Sea disruptions and what that could potentially mean.
There still are Red Sea disruptions, and it's been a concern for businesses who've had to find different routes, especially to Europe. And this has been an entire inflation story in Europe. And the BOE has said this can be and is inflationary. So it'll be interesting to see where he sees this going, the state of play.
Especially because we've seen it prolonged again and again in terms of when people see some kind of potential resolution. We are headed for another gains, possibly the 32nd record high on the S&P for 2024, building on those, up 0.4%. Bond yields up just marginally, about 3 basis points. This is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself. And I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Coming into potentially a 32nd record high day for the year on the S&P 500 as we take a look at what can possibly drive us higher given what has been basically the engine behind all of this, and that is NVIDIA and a couple other big tech stocks. S&P futures up about 0.4%. NASDAQ, not surprisingly, outperforming yet again, up almost 0.7%. And the Russell 2000 still lagging behind, up about 0.33%. This really raises this key question. Can it continue even without broader participation? Danny, you talk about robots, you talk about algos, you talk about just, what kind of bubblicious kind of feeling there is akin to Cisco in 2000. That is the anxiety really underpinning a lot of these trades.
It is, because it's not necessarily the idea, NVIDIA is not a good company, it doesn't deserve to rally. I mean, of course, NVIDIA offers this really big contribution to the world as a whole, but have we overdone it? Have we got ahead of our skis? I think that's the question. Not necessarily is NVIDIA going to crash, but how much do valuations need to come down by to be more in line with reality? And what does that do to overall sentiment when it's the thing carrying the market?
What is reality, though? And it is existential. It's existential every day, but there's this question of what is reality, Anne-Marie, especially when people are talking about political risk and they're talking about bond yields being a problem. Right now, bond yields coming up just a couple of basis points in the United States. You can see across the board, but marginally so. And after a pretty big rally, 10-year yields now 4.25%, despite some calls for it to go to 5%. The 2-year down markedly from a high just not that long ago, about 5% to 4.73%. Political risk. And then there was a bond sale in France. And guess what? It was fine. So it raises this issue of, okay, people can jawbone all they'd like, saying it's going to be a huge problem. Everyone's going to flee and be the new bond vigilante of 2024. And yet,
solid demand. It wasn't just fine, it was actually solid demand. It was the first auction we saw since Macron decided to call that snap election. To your point, in reality, people are starting to actually assess this and say maybe it's not going to be as bad. Lionel Laurent, in his recent opinion piece, called it triple cohabitation. That's potentially what we're going to see with French government.
What is the obsession with cohabitation? You're just trying to get it into absolutely every single conversation.
Oh, that's the new model.
Okay, that's evidently, you heard it here first. The new model in the euro is slightly weaker right now when you look at what's going on, although marginally so, 107.28. Under surveillance this morning, counting down to the Bank of England rate decision just under 30 minutes away. The central bank widely expected to keep rates on hold as the UK prepares for a general election on July 4th, which is the reason why we kind of began, Danny, with this idea of, are we there yet? The rate cutting cycle that was supposed to be, how far are we delayed, deferred? Are we in SNB land or are we in Norwegian central bank land?
Probably more Norwegian central bank land. They're still upset about high surface inflation, but it's this cutting cycle coming head to head with this political cycle. And the BOE is an explicit example where those two have come together. The BOE isn't going to give a presser today. They're not going to say anything because they're in a blackout period until the elections in the UK. They're not going to deliver a cut when they can't talk to the market and communicate why they've done it. So even though, look, they probably wouldn't have cut either way, here's a very clear example. Politics, whether central banks want to say it or not, is interfering with their decisions.
And the general election was called on the same day we had the April CPI print. So we haven't even